Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody. Good morning and welcome back to another live stream. A big one here for CPI coming in hot. CPI, of course, probably one of the most important economic figures that we get each month because inflation is really all the focus right now in terms of, what the Fed's going to do next. At the end of the day, what's going to get the Fed to cut interest rates? It's going to be soft inflation. Today, I believe the statistic, the expected number is a 2.6% reading. Is that right? 2.6%. So the expectation from the market is a 2.6% rise in prices on an annualized basis. And the Fed has a target of getting inflation down to 2%. Now, prior to this announcement, we see the NASDAQ ripping higher. I actually don't know exactly why, but I do happen to know that NVIDIA, a share that I own, or a company that I own quite a few shares in, which is a good day for me here. We're up 4.4% on NVIDIA shares this morning. I just got to the desk, so I'm not exactly sure what's happening here. China chip sales set to resume. Oh, okay. Yep, that makes sense. So NASDAQ ripping higher here off of the idea that perhaps some restrictions on sales to China from the semiconductor side of things. I'm specifically going to pull up SMH to see if that is correct. And it does seem to be the case. You've got semiconductors as a industry moving up 2% here this morning. That is bringing the NASDAQ higher with it. And on goes the momentum trade that is the NASDAQ. This thing has been tough to beat recently in terms of its performance. Like, take a look at this chart. I mean, this is a beautiful upward trend and hardly any rest in this trend. If you've been in it, you know what I'm talking about. This thing has been, just a one-stop move. If you've been wanting to be in it, you also know what I'm talking about. It's been frustrating to not get pullbacks, right? So that's been, something to keep an eye on. We also have gold, which continues its long-term uptrend. The question is this going to break out of consolidation and actually get a push through the highs, or are we just going to stay stuck ranging back and forth while people get chopped to bits in their trading accounts? That's the question. We'll have to see. Hey, Nick, I wish you didn't close the DAX trade. Yeah, I mean, hey, I trailed stops on it. I made money. I'm good with it. I may re-enter. You never know. Well, I guess it depends what we get. If we get a couple days down, I'll probably re-enter the DAX trade if it's still an edge finder top setup. I'm still in the Russell trade. This thing's been a beast. Trailing stops, letting that winner run. This has been the biggest winner in my account this year. So we'll see if we can get some continued upside on that front. CPI gold buy or sell. Let me just say this as I've said it. I've done these streams for years, and somebody like this constantly will come in on a CPI day. And again, I'm not calling you out per se, you specifically. It's just that every single CPI report, you get people who want, they jump into a stream like this. They're new to trading and they say, should I short or buy gold right before CPI? If you are doing that, you are gambling, and it is a matter of time before your account blows. I'm not saying that to be mean or to be harsh. I'm telling you the truth. If you are jumping into random live streams and saying, hey, should I buy gold or should I short it right now? And you're looking at the comments and you're about to press the button, buy or sell, that you are not in the right spot to be trading. You should probably close down your live account right now. So, is gold a buy or a sell before CPI? No one knows what CPI statistics are going to be here, right? So CPI reports or CPI is expected to come in at 2.6%. Will this impact gold? Definitely. It will definitely cause some kind of impact in gold, even if it's a small impact. It will move gold prices. It will move the dollar. It'll move the indices. It'll move, currency pairs. It'll move commodities. CPI is really important. That's why everybody's here. But let me caution you, if you are somebody who is new to CPI or new to trading in general, and you don't even know what CPI means, which there's a lot of people who jump into these streams, they don't know what CPI, they just know, ooh, big red candle or big green candle, what should I do? Right? Be careful. Okay. I know I'm joking around and I'm being harsh, but genuinely, please sit back for a second, relax, wipe the sweat off your face. When it comes to trading CPI, CPI is an economic report that shows inflation on an annualized basis. It is important to the overall economy of the US as it is reported across multiple countries. We also get Canada's CPI this morning, right? So this is an inflation statistic. Calm down for a second. If you are trying to gamble the CPI report, I have done this for almost 10 years now. People have come and gone, blowing account after account, doing what you are doing. If you are, sweaty hands, sweaty palms, gonna press buy or sell on what's gonna happen in the next few minutes on CPI, just don't. I'm telling you, that is gambling. You are practically at a casino right now. Don't do that. So then what should we do? So what's the big idea, Nick? What's the point of CPI then? Not to gamble it, not to trade the 1 minute chart on CPI. That's again, you are playing with fire and you are guaranteed to get burned if you keep playing with it. So what do we do with it? CPI reports, let's actually look at what it tells us. It tells us the annualized inflation report of the United States economy. And it shows us, is inflation heading in the right direction, meaning lower towards that 2% target, which could allow the Fed to cut interest rates, which would be bullish for gold, but not in the next 30 seconds, but rather in the next few months. That could be a catalyst for swing trading opportunities. It could be good for stocks, as stocks would love to see lower borrowing costs. It could be good for the consumer, right? The consumer can go buy a car or buy a house at lower rates if interest rates come down. Let's think with our head, not with our, okay? Let's actually look at CPI and let's understand what this statistic is telling us about the underlying economy. Let's do our homework. Let's not gamble. If you're here to gamble, find the next stream. This is not it for you. If you want to have a fun time with CPI and maybe blow your account, maybe double it, wrong stream, because that's not what we're going to do in here. What we're going to do here is we're going to talk about consistently how to make money from the markets over time. And in that approach, all I can tell you is the fundamental analysis, what inflation statistics actually tell us do matter. They help us to understand the trends of the market instead of trying to gamble the 30-second chart on what CPI is going to do. Again, I've been in your shoes. 10 years ago, I would have been like, oh my gosh, yeah, CPI. We could, I don't know what CPI means, but I know it moves the market a lot. It's dumb is what that is. But you got to live to learn, right? So I learned my lesson. I tried to gamble on news 10 years ago. It was stupid. It's a waste of time. Instead of gambling on the news, let's actually understand what it tells us. So let's start from the dollar for a second. The dollar index has been trending lower here in the last few months. Part of the reason it's been trending lower has because inflation is on a 4 streak before this. We'll see if it hits a 5 streak. Let's understand what we're looking at. Inflation statistics leading up to today have had 1, 2, 3, 4 times in a row where the actual inflation statistic that was published was less than what the analyst community had forecasted. So let's actually understand what we just discussed. Inflation has been coming in lower than expected. Do you see the red bar, the red dot that you see on the screen? These red dots are the analyst community's expectation of what inflation is going to be. Okay, so today we are expecting the community of analysts, these are banks, PhDs, all the smart guys, they're expecting a 2.6% inflation statistic today. For the last 4 reported numbers, inflation has been coming in less than the analyst community had expected. So will we see a repeat to that? Will we get a 2.5? Will we get a 2.4? We'll see. But if you get an inflation report that comes in less than forecast for the dollar, everybody in here, help me out. If you get an inflation report, a CPI statistic that comes in less than forecast, does that cause the dollar to push higher or does it push lower? Think about it and drop your answer in the chat. Here's your chance before we jump into CPI report to understand. Again, let's actually understand if inflation comes in soft, then the Fed can cut interest rates sooner. That's the idea. Is that bullish or bearish for the dollar? You guys got it. Nice. I'm proud. Yes. Lower for the dollar. If you get cool inflation, that is bearish for the dollar and bullish for gold. What? Inflation lower is bullish for gold? Nick, you're an idiot. Nope. Inflation going down is bullish for gold because the Fed can cut interest rates, which weakens the dollar, strengthens gold. Okay? Othman says it'll push to the right 100%. That is guaranteed, unless the market, I guess, closes forever. Then it can't go any further right. But yes, so in terms of the consumer price index today, we are looking for a soft inflation print would be below expectations. Now, what about if it goes up? If inflation goes higher than forecast, right? Again, our baseline is 2.6%, guys. If we get higher than 2.6, if we get 2.7, if we get 2.8, the dollar will likely rally. In that circumstance, you would likely be looking at a US dollar pushing back up towards that 99 level, right? That would be a very bullish scenario for the dollar. So we'll see. We're going to get the statistic in just about a minute and a half. I do want to ask, if you enjoy my streams and videos, do me a big favor, just hit the thumbs up button. And if you're new here, if you actually want to understand what these CPI, NFP, PMI, PCE, all these statistics actually mean and how to read them in the context of the market story or trends based on fundamental analysis, I invite you, I ask you to consider subscribing to this channel and come to every major news event to this stream. We do this for all major news events for the US economic data. And it's a really, really important thing that you understand what this data is actually telling you. Don't just gamble on it. Again, that's where people are going to lose a lot of money. So I'm so passionate about that subject because, as you can probably imagine, I've been trading for a long time and I've streamed on YouTube since 2018. You can imagine how many people I've seen blow their accounts on these sort of things. That's why I'm so passionate about this topic. Please don't be the next one. Be a sane person. Don't be an idiot. All right. So we've got indices moving higher into the CPI print with about 20 seconds to go. Dollars higher into the print so far. Let's see what the statistic brings us here with breaking news coming in just after this. All right. Let's see what CPI gives us here. CPI print coming in now. Dollar initially soft. Indices pushing higher here. Gold holding up fine. Nas higher. Russell higher. These are not big moves, guys. This looks like a as expected CPI print. I'm going to guess it came in 2.6. Let's see if I'm right. 2.6? 2.7. Okay, so we were actually slightly higher than expected, but core CPI came in soft. So core CPI came in soft. Headline CPI came in slightly hot. And so that's why you're getting a slightly mixed reaction. Core CPI was soft, meaning lower than expected, but headline CPI was higher than expected, giving us a mixed report. So with a 2.7% inflation report versus the expected 2.6, we said that that would be potentially bullish for the dollar. So why isn't the dollar going up? Because the core CPI month over month came in soft. This removes some of the more volatile components of inflation, right? Volatile being like housing and food, right? These things can alter in price very quickly. I'm sorry, food and energy, housing. So then when we look at the core CPI, right? Core CPI coming in soft, Headline CPI coming in hot. So it's a bit mixed. So that is probably why we're not getting a huge move one way or the other. Dollar index on a 15-minute chart is moving lower, but on a daily chart, that's not a big move, at least at this time. Indices are holding their gains for the morning. Here's the Russell on a 15-minute chart. Very nice. Let's take a look at some of other charts here. You've got gold initially popped higher, giving back some gains. Again, bit of a mixed report. And this is why when we talk about CPI reports and why I talk about like don't gamble on these events, this is a good reason why. A lot of people will do this. They'll jump into a long as soon as it starts going up. They're like, oh, it's going to go skyrocketing, or and then it will go down, and they'll, oh, I'm going to get short, and they just get whipped to pieces on these sorts of things. So be careful on these sorts of things, please. Silver also kind of mixed. You've got oil prices not moving too far. Bitcoin actually moving higher on this print, which is interesting. You've got Bitcoin on the rise. Take a look at some currencies. You've got euro dollar making a push higher here. Not a big move. You've got 12 pips on the hourly chart. Pound dollar, 12 pips, 13 pips. Dollar yen moving down by 9 pips. I mean, not a huge follow-through move. And again, the reason is because you had core CPI come in soft, headline CPI came in hot. So was inflation a good number for the dollar or a bad number? Again, kind of mixed. But core CPI is really important. Like you can't disregard, you can't say, oh, well, it's hot, so dollar should go up. Well, yeah, but the sticky stuff, the most important stuff, the core CPI stuff came in soft, came in low. Yeah, definitely mixed. Definitely mixed here this morning. Again, let me be very clear. If you had gotten this number to come in hot too, the dollar would be screaming right now. But this number came in soft. This number came in hot. And I'm sorry for the acronyms. One came in higher than expected. One came in lower than expected. That's the long story short. Core CPI and CPI are both important. But when you remove food and energy are like really volatile components of CPI. They go up and they go down and up like a lot in a specific time window. Things like housing and auto sales and things like that. Right. So they can be, let's actually see if we can pull this up. Food and energy prices account for about a quarter of CPI, but they tend to be very volatile and distort the underlying trend. Right. So core CPI says the Fed usually pays more attention to the core data. So do traders. So that is why what you've got here is an important distinction. Core inflation came in soft. Headline inflation came in hot. Higher than expected, lower than expected. So that's where we're getting a mixed report. The dollar itself is actually favoring, at least right now, seems to be paying more attention to core CPI. Core CPI came in lower than expected. Gold prices mixed here. NASDAQ continuing its push. Dow Jones flat on the day. Come on, Russell, do it for me. If I can get another higher high on Russell, then I'm going to trail stops again. So yes, how this is going to come in is this number is going to actually be for the first time. Headline CPI is going to have the first higher than expected tick. Which, to be honest, so let me actually play a little bit of devil's advocate here for the dollar. In some ways, I think this is actually pretty positive for the dollar because the dollar's just been completely missing in a lot of ways in the last few months. So having at least a headline inflation print come in higher than expected could at least stabilize the dollar. That's why I think you're not getting, again, if you had headline CPI and core CPI lower today than expected, dollar would be dropping hard. But I think that's why you're getting kind of a neutral sentiment to the dollar. So let's see what this does to rates. So the bond market is pretty much unchanged. So the bond market is saying, this doesn't really change rate probabilities. We're still thinking a rate cut September. So bond market saying, still think we're going to get cuts. No urgency to cut them in July. That seems to be what the bond market is suggesting out of today's CPI report. And to me, that's going to mean, okay, I respect that because we don't really have a huge, like your big ones that the Fed is going to look at were NFP, which was hot, which suggests less rate cuts, and CPI, which came in mixed. So neither of these things are saying, oh, Fed, you got to cut rates in July. So I actually think it's probably a September cut. And again, that favors dollar kind of staying neutral for me right now. Does it favor a ton of upside for gold? Not really. Gold wants urgent rate cuts. That's what gold wants at all times. If you want to talk about what makes gold go up significantly, if you're somebody who's bullish on gold, you want the Fed to have to cut rates in a panic. That's what makes gold go up by $1,000 an ounce. Because if the Fed is cutting rates in a hurry, like they're scared and they're cutting rates because, oh my gosh, the economy's breaking apart, you can understand why people flock to gold in that environment. People are like, oh my gosh, the economy's collapsing. We need to buy gold. That's not what we've got in front of us. That is not what happened, right? In terms of the latest round of economic data, we had a better than expected NFP report. They also revised the previous month's numbers higher. It was a good jobs print. Unemployment rate went down to 4.1%. The labor market, unemployment claims trending lower again. Labor market looks solid for now. Job openings had a uptick recently. Hiring seems to still be going on. And inflation, while slightly higher than expected on a headline basis, core CPI came in actually better than expected, lower today. So the story to me is, Lee says, what about yields? How are they affected? Yeah, I was just looking at yields. So yields, right? Yields are suggesting, yields are shrugging right now. They're like, okay, yeah, we're going to cut rates in September. That's to me, that's what yields are suggesting. They're not moving off of where they were prior to today. Yields are suggesting the Fed is probably going to cut interest rates in September, but feels no pressure to do so in July. So what do I do with this, right? What do I do with this as a trader? Well, economy looks solid. Inflation still got some work to do, but the jobs market is strong. Forward expectations for GDP growth still look good, right? US GDP is expected to grow 1% in Q3, 2.1% in Q4. As far as I'm concerned, if I'm looking at where I want to be, I want to stay bullish indices. Now, that does not mean I'm going out and I'm buying indices at this second, but we generally have a path of rate cuts coming. Company earnings are strong. I mean, take a look at your leader today, NVIDIA. Here's the leader of the AI stuff. It's up 4.4% today, right? So this don't forget what got us here, what got this market to rip out of that 2022 down market where inflation was, scaring market participants and rate hikes were all over the place. What got us out of that? Inflation was scary over here, but then all of a sudden this AI story started going crazy. Nowadays, everybody's using ChatGPT and Grok and Gemini and Perplexity and all these things. And NVIDIA ripped higher through all this and helped to carry the torch, right? So to me, it's like, okay, I look at this scenario and I say, are we going to get rate cuts? Check. Is global, geopolitical stuff at a better spot than it was a month ago? Yes. Is inflation generally in the right direction? Yes. Are company earnings strong? Yes. Is AI still a strong theme? Yes. The problem What's the big issue with this? So why am I not just full port long the NASDAQ right now at these levels? I'll tell you why. It's because what I just described, everybody's already kind of excited about. I like to buy stuff when people are not so excited about it. So if we get a couple days down, if we get some scares about tariffs, oh my gosh, and then and that starts to flare up again, that might produce a good risk to reward buying opportunity. But for me personally, I'm already long quite a few number of stocks, and I'm long the Russell 2000 index. I already have long exposure to the market, so I'm not looking to add a whole bunch. But let's just do this thought experiment. If I was not long the Russell, what would I be doing today? If I was not long the Russell, and I'm very bullish on indices at this time, you've got the Edge Finder giving you a +8 on the Nasdaq. What do I do with that? You've got a +6 on the DAX. You've got a +6 on the Dow Jones. The FTSE's giving us a bullish reading. Gold is giving us a bullish reading. What do we do with these setups that are showing up? If I had a blank slate, how am I approaching this? And again, this is my approach. I'm not telling you what you should do in your account. This is just what I would be doing if I had a fresh account to deal with. No current positions. I'd be looking for a pullback in the NAS. I'd be looking for a pullback in the DAX. I'd be looking for a pullback in the Dow, pullback in gold, possibly add some euro dollar longs. Although with inflation kind of coming in slightly higher than expected on the headline today, euro dollar might get kicked off the list. There's some other currency pairs that I'm more interested in. NZD CAD, NZD JPY, right? So we'll come to that in just a second. In terms of bearish setups today, you've got these currency pairs, but let me just go through really quick. So again, clearly I'm bullish on the indices. I've been bullish on the indices for pretty much most of May, June, and July. In April, I was adding some long-term stocks to my positioning, but then I actually got long the indices through the Russell on some of these pullbacks. Anyways, so let's see. When it comes to the NASDAQ, if I'm fresh on positioning, I'm looking for a pullback at least to the 22,000 level. If we get a pullback to the 21.5 level, I'd be more interested. So this level looks really good to me on the NAS. Again, you've got overall momentum here favoring the bulls. Really, really strong chart here. Nick, Chris is at least 5 times more defensive than you are. That is why I like the two of you. You build a great team. Bulent, yeah. So Chris and I have different styles for sure. What I love and sometimes envy about Chris's style is he is way less, like I'm very directional with a lot of my ideas. Chris is far less directional than I am. Through his use of options, he can make money if the market goes sideways. I do also do options, but it's a significantly less sizable component to what I do compared to Chris Pulver, right? So what I love about Chris is that Chris is able to trade a market that's going up and down, and he's able to do very, very well in that environment on the index level, stock level, etc. Me, not so much. If I'm long and the market just drops hard, I'm going through a drawdown. If I'm short and the market's going up, I'm going through a drawdown, right? Although I rarely short indices, it does happen sometimes that I've been on the wrong side of them plenty of times. However, what's nice about my style of trading is right now is the sweet spot for my style of trading. I've got winners running and I'm trailing stops. Not to say that Chris is doing poorly. I spoke to him the other day, said he's doing fine. So he's got lots of long positions as well that he's administering. He's also selling some premium. So he's doing great. So when we look at the Russell plan here for 2200, as long as we can hold this level, I'm going to stay in the trade. I'm staying long. This was an Edge Finder top setup the other, couple weeks back, and I'm still in the trade. I'm just trailing stops on stuff. And I love being in this situation because when I'm trailing stops, what it does, it basically makes my day job here on the trading side very simple. When I'm in trailing stop mode, I'm just looking for example, with gold, I have a long trade. If we can get a strong closure today, I said this yesterday, didn't happen. Today, I'm saying it again. If we get a strong closure today above 33.50, then I can actually take my stop loss and I can trail it further into profit. Actually, specifically, I may be able to skip this level and jump right on up to this level, depending on how the candle closes. So one of my or my main trading strategy with it in terms of my momentum trading strategy, it's 75% of what I do is fundamental analysis and sentiment analysis. I use the Edge Finder to help me spot those opportunities. 25%, if I'm being generous, probably more like 15% or less of my approach is actually technical analysis. I've said this many times on my streams. I love technical analysis. I love charting, but it is massively overrated in my personal humble opinion. I have found that there is far more edge for me to extract in the markets through fundamental analysis and sentiment analysis than I'm ever going to get marking up technical charts. Do you know why? Think about this. Every single retail trader, not every single, but 99+% of retail traders base majority of what they do off of technical charts. Nothing wrong with technical charts, but there is such a thing as saying, okay, if everybody's doing technical analysis, if everybody's marking up support and resistance, and everybody's doing trend lines and moving averages and Fibonacci's and fair value gaps, if all of that is the retail go-to, the crowd approach is to use technical analysis, and also 99% or whatever the stat is of retail traders lose money, maybe I shouldn't do exactly what they do. In fact, turn on CNBC and listen to the professional fund managers that go on and get interviewed. Do they talk about technical analysis? Nope. They talk about the Fed. They talk about company earnings. They talk about secular trends like AI. They talk about business cycles. They talk about monetary policy. Fundamental analysis is king because that's what the pros do. The crowd who just donates money to the fund managers, they all obsess over technical analysis. Now, I use technical analysis, so don't hear me and say I'm just bashing technicals. I'm just saying I think by the retail community, they are vastly overrated. Not useless, overrated. There's a difference. You can still use something that is overrated, but don't base, in my opinion, my humble approach, I'm not the end all be all. If you're doing well with technical analysis only, do your thing. Don't listen to this. But if you are like struggling and you're wondering, why is my technical analysis not making me a bazillionaire yet? There's a possibility that it's not that easy and that maybe there is something more. And maybe that the big fund managers who talk about inflation statistics and jobs reports and monetary policy, maybe they're doing so because there's more of an edge there. Right? Something to think about. But how do you use fundamental analysis? Right? Well, fundamental analysis is essentially studying the stuff that the Fed uses to determine if they should cut rates, hold rates, or hike rates. So if we're looking at the underlying economy, this can look scary at first. CPI reports, retail sales numbers, services PMIs, GDP growth. This can look scary at first, but I promise you it's not as bad as it looks. It's actually quite powerful and can be simplified pretty easily. Wage growth. We all know what wage growth is. Wage growth year over year across an economy is how much people are getting wage increases. And with wage increases at 3.7%, and we'll get the updated number of 2.6% shortly on the Edge Finder, people are still getting wages increased at a higher percentage on an economic level than inflation. So prices are going up slower than people's jobs are paying them wages. That's good. That's strong for the consumer, right? If you're getting a wage increase that exceeds the price of living, you're doing better. This was not the case a couple years ago, right? When we had inflation, spike up at 2020, 2021, 2022 due to the pandemic, that really hurt people because inflation was happening way faster than wage increases were taking place. So now we're in a much better spot. Inflation has come down over the last few years. So inflation has been coming down, wage increases. That's a real trend. That is a real powerful force that puts more money in the pocket of the consumers. And how does that impact the charts that you're looking at? Substantially. Inflation cooling, wages outpacing inflation impacts the charts that you trade: gold, currencies, commodities, indices, stocks, all of it is impacted dramatically by what we just discussed right there. So if you can understand these trends and spot them and be on the right side of them, it's a game changer. The Edge Finder is our tool that our software company here, A1 Trading, has been building since 2022. Well, actually, we started building it in 2021. It became public in the springtime of 2022. And since then, we have just continuously improved the tool. We have economic heat maps for all of the major economies in the currency market. We also have scanners for indices, gold and silver, commodities, Forex, bonds. We have institutional positioning. You can track the institutional holdings through the commitment of traders data using our simple to use dashboards. You can also look at the historical commitment of traders data. We have a smart money indicator where you can track retail versus institutional positioning. You can take a look at retail sentiment and track what the crowd is thinking about particular assets and get contrarian signals from each one. You can look at the options market flows and look at put to call. It is an all-in-one powerful market data screening tool. And the best part is all of that data automatically through the algorithm that it has looks through all that data and generates bullish and bearish setups each and every day. So whether you trade currencies, commodities, or indices, the Edge Finder is monitoring a huge set of data. Again, we've got a really talented team behind the scenes here that's working on this tool day in, day out. If you don't have a copy of the Edge Finder and you'd like to get one, we are currently offering a huge discount on the tool. We are offering 45% off for our summer sale event that is going on right now. If you are interested in getting a copy of the Edge Finder, we're going to drop a link here in the chat in just a moment to where you can get some information about picking up a copy of the Edge Finder for 45% off. This link right here for a limited time. If you send us a direct message letting us know that you're watching the live stream, we can get you 45% off. One of the best parts, it is a one-time payment for unlimited access to the tool. You do not have to pay over and over. It's not a subscription model. You pay once, you get access to the tool. If you're interested in that, please click that link and you'll be connected to a member of our support team. That support team member can chat with you about what we offer. And if the payment is outside of your reach, but you don't want to miss the sale, ask them about payment plans that are available. We are able to split up the cost of the tool into 2 to 3 payments for you if that is something that you are interested in. Do not miss it. It's the lowest price that we do all year long, 45% off. Nick, what price I will DCA the AUD NZD? I don't know. What price are you considering? The Australian dollar against the New Zealand dollar. I have a short position here. I'm interested in a possible secondary short position if you do get a push up into this 110 level, but I'm probably not going to do anything before then. As a data freak, it feels like heaven. Yeah, I mean, I genuinely mean this. I don't know how I functioned pre-Edge Finder. I used to do things by hand. So I used to like go and write down like, oh, what is CPI and what was it compared to forecast? Nonsense. In a world of software, use tools. Don't do stuff by hand. It's absolutely silly. And so time consuming. So I used to do things by hand until we took on the project of building the tool and it became hundreds of thousands of dollars of investment. Later, the Edge Finder was born. It's a massive ongoing campaign to build the data sets that I think the average retail trader just completely lacks. You know, funds and asset management groups and, you know, hedge funds and banks, they all have stuff like this, but they don't sell it. It's proprietary. It's privately accessed, right? Do you know what Bloomberg terminal costs? Does anybody know what Bloomberg terminal costs? Now, the Edge Finder is not on the same level, I would say, as the Bloomberg terminal in terms of its data sets and real-timeness. But to me, I think this is really bold, but I think the Edge Finder is better in many ways. It's really simple. it's not so complicated and so convoluted. The Bloomberg terminal, do you know what the Bloomberg terminal costs you? $2,000 a month, $25,000 a year. That's what a Bloomberg terminal costs you. So right now we're offering it for $770. You pay once. Usually it's $1,400. And people are always like, "Oh, Edgefinder's so expensive." I don't think people realize how expensive it is to build this stuff. And I'm not complaining because we've done really well. The Edgefinder's been a really great seller. But people's perception of what it costs to build these sorts of tools is way off the charts. It costs millions of dollars to build them because there's support teams behind the scenes. There's writing up explanations for everything within the Edgefinder. There's building the automations. They're building the UI, upkeep, maintenance, customer support. Yeah. Bloomberg Terminal, for example, costs you $2,000 a month. So again, we build what I think is an incredible product at an incredible price. Even though, yes, it's an expensive tool, nobody's going to say it's a cheap tool. I will never call the Edgefinder cheap. Edgefinder, I think, is a great tool at a great price. If it's expensive to you, send us a DM, let us know you want a copy, and we can split up the cost into 3 payments for you to make it easier. Just send us a DM. Like I said, message us here. If you're interested in getting a copy and the cost is too much to you up front, just let us know. And my team is really great at helping out people with splitting it up, doing that sort of things. I can vouch for you guys. Thank you. Yeah. So anyways, CPI today was pretty mixed. Stock market seems to be rallying higher anyways, but I think this is more on the NVIDIA news. Yeah, look at NVIDIA's up 5%. Let's go. How's Tesla doing today? Come on, Tesla, up 0.5%. We can do better than that. Tesla's one of my biggest stock positions. NVIDIA is my other biggest stock position. So it's a good day on the stock side. Robinhood down a little bit this morning. Walmart down slightly. Robinhood didn't get put into the S&P 500. That was big news. A lot of people were hopeful that Robinhood, myself included, actually, they chose the trade desk instead, which is another stock that I liked and I didn't buy. So I'm feeling kind of annoyed that I didn't buy this one. I think the product's really cool. I just think the stock's really expensive. But anyways, they put TTD in there instead of Robinhood into the S&P 500. I think S&P 500, it's only a matter of time before they put Robinhood in there. This thing's a monster stock. But I'm glad that it didn't get it put in there because, long story short, I own the shares, but I also shorted a call. So if the stock had ripped higher, I would not have seen any further gains since the stock is capped for me at $95 a share since I sold a covered call. If you don't know what all that means and you don't care, all good. I try not to stay on stocks too long on this main channel. So if you'd like to know more about the stocks that I'm trading, options plays that I'm doing, you can find me on my secondary YouTube channel. It's Trader Nick Stocks. Just look it up on YouTube, Trader Nick Stocks. If you're interested specifically in stocks that I'm watching, I cover that stuff frequently on that channel as well. Gold's up 0.19% here this morning. You got silver up 0.14%, copper's up 0.5%, natural gas up 0.5%. You got Bitcoin down a little bit. Bitcoin up to 123,000 here recently. It's crazy. Momentum looks really strong. Bitcoin to gold ratio also looks really strong. This suggests very strong risk on sentiment at this time in this market. The Bitcoin to gold ratio tool within Edgefinder will show you just a simple calculation, just divides the price of Bitcoin by the price of gold. If this is trending up, people are preferring Bitcoin over gold. If it's trending down, people are preferring gold over Bitcoin. The reason I think this is very useful is because when gold is ripping higher here, when Bitcoin is ripping higher here, it suggests that the market's risk appetite is pretty good. People are feeling optimistic. People are feeling strong about markets. I think that right now, where you have to be a little careful is that this may be starting to get a little frothy. Bitcoin to gold ratio has traded just really strong here recently. So is it possible that we're getting a little over enthusiastic? Possibly. I've made the point in my videos recently that I think people might be slightly underestimating what could happen if some of the trade deals do not go through by August 1st. But I think the market is just kind of not interested in trading based off of tariffs anymore, which again was sort of the prediction that we made on this channel. I went really long stocks in April. The idea that I had in that time, which panned out really well. I was early to the idea, so let me not pat myself on the back too much. I was early to the idea. I bought stocks here, and I bought stocks here. When I was buying stocks, my theory for buying stocks was I don't think that the worst case scenario in trade negotiations would be the outcome that the market was fearing. Market was like, oh, we're going to have 145% tariffs on China. It's all over. And trade is just going to come to a grinding halt across the entire world. And that didn't happen. Deals started looking more promising, and worst case scenarios seemed completely ruled out. And that's why the stock market rallied back. In combination with strong economic earnings, people thought tariffs were going to ruin company earnings. They didn't. People thought inflation was going to skyrocket. It hasn't. Yeah, Lee puts the markets are tariff fatigued. Yeah, I think people were fearful of the worst case scenario. That didn't happen. And now that same thing that would cause the market to drop 2%, the market's like, okay, we get it. Tariffs are an ongoing uncertainty, but we got company earnings that looked good. Inflation did not spike higher. Could it still? Sure. Could earnings deteriorate? Sure. But right now, the market's trading off what it's been given, which is good earnings, low inflation. Could it change? Sure. But I'm not here to make that prediction. I'm here to trade the market. Market's moving higher, and the trend is cooling inflation, interest rate cuts, strong company earnings. I'm not going to fight that. I'm going to buy dips on that. So that's what I've been doing. And again, there are times where I'm dead wrong. But right now, we've been very correct in just listening and following the trends in the markets. Wells Fargo, I believe, to answer your question, Roman, I believe we did hear from Wells Fargo this morning. We have a stock moving lower by 3.5%. Did we have Citigroup? Yep, Citigroup was strong. So Citigroup's earnings came in, beat on the top and bottom line here for Citigroup. Wells Fargo, what happened with Wells? Wells did also beat top and bottom line, but perhaps there was some sort of forward guidance that the stock market did not like. Regardless, company earnings here to start out the week look good. We also had some good news on the semiconductor front. Stock futures rise after positive bank results. June CPI reading. I mean, this was big this week, was to have a strong start for financial stocks, which usually start the earnings cycle. And we've gotten that so far. So stocks, again, it's not a trend I want to fight. People have been getting killed this year in the stock market because they've done two things in a row. And I can tell you this because, and you can see it in YouTube comments as well, but I can see it really well from my portal because behind the YouTube scene, or YouTube Studio app, I can see all the comments across my channel. And the comments have been, when this market was selling off, people were like, this economy is going to crash. And the bears came out real loud, especially towards the bottom. We saw that in the sentiment reports. Again, check your sentiment tools, and you can always get an idea of what the crowd sentiment was. At that low point in the stock market, people got the most bearish in the weekly reported survey from the AAII Investor Sentiment Survey. People got the most bearish at the bottom of the market. Amazingly, they do this every time. It seems like when the market falls, the bottom is in, usually around when sentiment peaks bearish. So everybody got super bearish right at the bottom of the market. Since then, things have changed. We can actually scroll down on this tool. If you have the Edge Finder, a lot of people don't know. If you scroll down on the AAII Investor Sentiment Survey, we have these two additional charts. This is bullish sentiment over time, isolated. So you can see bullish sentiment is on the rise. Bearish sentiment is on the decline. Now, why this matters is that as this number rises, even though I'm bullish, I'm a little less attracted to buying more stuff when everybody's kind of tilting bullish. And I'm way more interested in buying stuff when everybody's tilted more bearish. If I wanted to short something, which I don't, but if I did, this would be a more interesting time, right? From a risk to reward standpoint, I like going somewhat contrarian when I can spot those opportunities. And so I'm not short the market. I'm very bullish on the market, but my concern is now everybody else is joining that trade. So yeah. How do you trail stops when the market isn't pulling back? Grizzly, that's a great question. So with the Russell, fortunately in this situation, it's had several like mini pullbacks, which have given me opportunities to trail stops. But if I was long like the NAS, let's just say I was long from like here, I would still just be getting down, you know, all these levels, right? So I'd trail behind this, I'd trail behind the all-time high breakout, right? And then I probably would have trailed also behind this kind of stalling point. So even consolidation, I will use as criteria for trailing stops if it's a break, if it's followed by a break through those highs. Anytime you essentially get a strong breakout above resistance, that to me is a signal or a trigger to trail my stop loss if there is a consolidation or a previous market structure high that I can use as a jump point, right? So if I was, I'm not long the NAS, but if I was long the NAS, I'd probably have my stop here. And then with this breakout today, I'm probably moving my stop there. And it's a bit of an art and a science for me. It's not a perfect equation. Again, technical analysis makes up a minority of what I do in the markets. The majority of it is the fundamental trend, is the sentiment trend in my favor? If so, stay long or stay short, depending on what the directional bias is. And then the technicals are kind of the last piece in the puzzle. Nick, buy Google and Apple calls. So I actually sold Apple calls at the 210 strike price. And those closed in the money, and I actually closed shares. So I owned Apple. I bought Apple back here. I sold calls at 210, collected premium for it, and now stock is trading back at 209. I probably won't enter the stock unless it were to have a big sell-off once more. I'm not a huge fan of Apple shares at this time, but if I do choose to get, I am a big fan of Google, however. And what are Google shares doing today? Google shares are up 0.5% this morning. I like the idea of buying Google shares if we were to get a pullback, but can't really do anything with it at these levels. Would be more interested in Google in the 160s. But if we don't get a pullback, we don't get a pullback, and I just wait. Yeah. By the way, like I said earlier, Edgefinder sale going on right now. It is 45% off. If you want some information about how you can get a copy of the tool for our lowest discount or lowest price of the year, take advantage of the 45% off sale by sending us a direct message on our website. We'll drop the link here in the chat. Click here. Send a team member a message letting us know that you were watching the stream, that you heard about the 45% off discount, and you want some information. We give that to you. Like I said, it's the best deal we do all year long, so don't miss it. If you want a copy of the Edgefinder, it's a one-time payment. Thanks, Belent. I appreciate it. So I'm very happy about the Russell trade for you. That was the trade, and I remember the day you took it. You were on live, and you said, Kenzo, please give me a second, and took it. Well, that's actually a funny memory. Yeah, you're right. Sometimes I have to do that where like I'll be speaking with a guest on the stream and I'm like, well, shoot, this trade is ready for me. I need to place the trade. And in that case, it would have been a very expensive thing had I missed that trade. But that's the thing with my style of trading, right? I swing for the fences with my momentum style. And that has huge upside potential and also a lot of frustrating moments too, right? Because there's a lot of times where I take a trade, right? Take a trade, it moves in my favor, and then it goes back and I take a loss, or moves in my favor, and then I take a small win, right? So when it comes to this Russell trade, yeah, I was on stream when I took this trade, and I had to pause everything. I said, sorry, guys, I need to place this trade. I took the position. And it's pretty much just grinded higher from there. Now, again, there's been plenty of times, like I took an oil trade the other week that completely flopped. I tried to get long. I looked like an idiot, bought oil, dropped immediately, hit my stop loss within like 1 hour of posting the trade. So I'm not always right. I'm definitely wrong sometimes. But that's okay. At the end of the day, it's all about letting your winners run with my style of trading and cutting losers quickly with the momentum trading strategy they have. Now, I also have some mean reversion stuff that is longer term and super boring that I do in FX. But for the Russell position, NAS trades, gold trades, silver trades, for me, it's all about if I'm right, I want to stay in it. And if I'm wrong, I just want to get out. That pin was the signal. It was bullish on the edge finder, and you saw the pin on that bar. Pretty much, Billent. Yeah. That candle, like we shot lower and it just ripped higher. And the reaction to this level was so strong that I said, oh, this is a clear setup for me. I took the trade, I put my stop loss below, and it's pretty much just drifted higher since. It's not always like that. Sometimes I take that signal and I feel just as confident and it just flops. But the point is, sometimes people will comment on my videos and they say, Nick, you were so wrong about this. And I just have to agree with them. Oh, I was wrong. You're right. I was wrong about that. What many people sort of come to learn as they spend more time trading is that profitable trading has nothing to do with being right all the time. In fact, win percentage, you can actually have a very profitable system on a 35% win rate if your winners are substantially bigger than your losses. Let me just check our schedule here today. We've been streaming for a little while. We got James coming on at 9:15. Nice. Awesome. So just do a quick check on the top setups page. See if there's anything else that is available for anything in the market that looks good today. Take off our neutral readings. Let's do an updated look at the dollar index. Yeah, dollar index pretty much trading flat today. Gold trading flat today. Euro dollar, pound dollar. Pound dollar still holding support here. Let's see if that can break. If you get this sort of move on the pound dollar, that actually might be a bearish setup for me. Dollar yen. Good insights, Nick. You taught me a lot. I'm making money. Good for you, man. Good stuff. You know, at the end of the day, my channel here is as raw as I can be. I'm just sharing my experience in the markets. I've been doing this a long time. I've learned a lot of hard lessons. It's not been an easy road whatsoever. But if my channel can help you in some way, awesome. I can't do it for you. I can't tell you how to be a profitable trader in a nutshell. It is something that every listener right now, if you are not yet a profitable trader, it's going to be on your shoulders. You can learn something from these streams, but you got to go out there and you got to practice. You got to back test. You got to demo trade. You got to forward test. I can't do that stuff for you. The experience is irreplaceable and part of the learning process. If you are already a profitable trader, then you probably know that to be true already. You're like, I can watch YouTube videos until I can't keep my eyes open on trading. That will not make you a profitable trader. What will make you a profitable trader is scientific methoding the stuff, right? Actually trying things, experimenting, testing. Dollar yen's at the upper end of this consolidation range. Yen pairs have been pretty strong here recently. Here's Kiwi yen making that move up to 89. Seems like the Australian dollar breaking out against the Japanese yen. Canadian dollar looks really strong against the yen. Pound yen sitting at resistance, long-term resistance here. Pound yen looks really strong. Yeah, this trend looks amazing too. You've got a long-term level of resistance being tested. And if this breaks, this very well may be headed right back up to test the previous high that we saw around 207. About 50% of my fundamental earnings have come from this channel. Lee, I appreciate it. Thanks for sticking around. I appreciate all you guys who are regular viewers. We've got quite a great group of regulars on this stream, and we really appreciate it. Like, it's cool for us on the, I say for us because there's multiple hosts that take over the stream and also 2 producers behind the show. So it's been quite a cool thing over the years to watch a lot of traders stick around with us, right? A lot of traders come to this show every single day. Can I actually just ask, I know there's a lot of people who don't regularly chat. They may tune in all the time, but I'm just curious, if you are a regular viewer, meaning you watch at least one time per week or you tune in at least once per week, can you like type me in the chat? Just let us know. There are real people behind this show. We do a lot of work to make this show as good as we can possibly make it and keep it free. And it's always cool to see, you know, we have repeat viewers who are along for the ride with us. That's really, really cool. Like when we make like a change, we know like there's a group of people that are going to recognize that change because they're like, oh, I watch the show every day. I know exactly if you guys make a change, if you change the intro, right? Or if you change a guest. What's up, Candace? Good to see you. Look at you guys. That's awesome. Lurking for years silently. Attila, respect, appreciate it. Thank you very much. Daily visit. Awesome. It's really cool. Thank you guys for your ongoing stream viewership. And, you know, if you don't say much on the streams, obviously sit back, do whatever you want. But if you ever have recommendations, if there are things that you want to see more of in the streams, things that you want to see changed or improved, comment them. Let your voice be heard. I mean, we do a lot of the changes that we do are based on feedback that we get from the community. If people are like, we want to see more of this person, or we want to see more coverage of this, or the changes that we've made over time have been mostly focused on what people want to see more of. I believe we have James taking over the stream here up next after this quick break. So James, if you're good to go, I don't see your camera on just yet, but whenever you are good to go. Okay, he's good. Awesome. Okay, guys, thank you very much for sticking around. Listen to me ramble here. Up next, we've got Forex James, a very popular show contributor, and he has a background in all sorts of markets, but I would say he's especially heavily in the FX side of things and the macro data stuff, which you guys love, your macroeconomics and Forex fundamentals. So stick around. Up next, after this quick break, we've got Forex James. Stay tuned. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello. How's everyone doing? It's been a while, and I'll be honest, I had no idea I was on today. I'm not normally on Tuesdays, so I've got nothing prepared. However, we did just have inflation. So we had core CPI month on month, CPI month on month, CPI year on year. I'm sure Nick's already gone through all of that with you, so I'm not going to go into it too much. There's no point covering the same thing twice. In a nutshell, it does show sticky inflation, but it wasn't high enough for me to start assuming that the Fed isn't going to cut whatsoever. There's still the possibility of the Fed cut in September. I think July is just no-go. I don't think that will be happening. September, in my view, it's like a 55% chance they won't. And then obviously there's a 45% chance they will. However, there is obviously data still to come out from now until September, so it's a bit early to say, in my view. I was very bullish on the dollar, and I am still bullish-ish, roughly bullish. So I'm not sitting here. I know I've got an arrow here, but I'm definitely not expecting the dollar to start rallying to new all-time highs and breaking sort of the 110 or even to the 105 level just yet. I don't think we have the catalyst to justify it. However, I think the sort of the bull move I wanted to see has happened, sort of anywhere between sort of 98 to 100 to maybe 102 would be completely fine in my view. That's kind of expected. Or 101, sorry, not 102. However, again, I just want to clarify, I'm not necessarily just yet expecting us to go all the way, up to sort of 117, 118 to 120. I think that would be way too optimistic. There are other problems within the US that are acknowledged. Actually, as I said, I don't have anything prepared mentally for this, so I'm just going to kind of just go through stuff with you. So I document a lot of my research, and this isn't a sales pitch, but I want to show you because I think you might find it interesting. So this is something a lot of you should do, is build an idea, an objective idea about why you are bullish or bearish on something. But when you do that, you need to stay objective. You can't look at something objectively and say, okay, now it's bullish, and then a week later say, oh, it's still bullish because of my reasoning I had a week ago. And then the same thing a month later is, oh, a month ago it was bullish, so I'm still bullish. It doesn't work like that. So this was from, I think it was JP Morgan. I'm not going to read all of this, but essentially their underpinning, a key underpinning to our bearish dollar outlook is that US firms and households will pay the majority of the tariffs, which will weigh on US relative performance. There's another one here. This, I think, was from the same document. I can't remember, actually. EUR/USD traditionally performs well in both of these environments, which adds conviction to keep our euro/dollar long positions as well as our other US dollar shorts. So we know that JP Morgan is short. Is this? Oh, sorry, this is Citibank. Citi Research? Yeah, I think this was Citi, actually, sorry, not JP Morgan. So they are bullish on euro/dollar, and a lot of other institutions are, actually. I know, I think Goldman Sachs has a long position. There's a couple of long positions pending at 1.16 on euro/dollar. So although I think it is technically overvalued in terms of it's overbought, and let me show you why. If we look here on the weekly time frame, this just looks primed for a pullback, but that doesn't mean that I'm now expecting euro/dollar to go down to parity just because of some Bollinger Bands. But I do think naturally we've had a massive run to the upside, and we are now due some pullback. So whether we start looking to buy euro/dollar at 1.16, 1.15, I think that would be a relatively smart thing to do. Now, if we also look at the Edge Finder, we do have euro/dollar down here reading bullish at 5. We could be looking for something like that. The only downside is that euro/dollar bullish with a score of 5 is pretty weak. Remember, a reading of neutral is 4, so we're only one score above being neutral on euro/dollar. So it's not giving me really the conviction yet to be a heavy buyer. But it is there. The idea is laid out. We've just got to now wait for a catalyst, whether it be the Fed starting to cut rates, whether it be the ECB sounding a bit more hawkish, or reiterating their pause. We will see. Again, I'm not telling you to buy now. I'm just laying the foundations for you to build from as you see the data develop. Anyway, sorry, I've not read any of the chat. So hello, everyone. It's nice to see you all. Sales, good to see you. Royal Trader. Oh, sorry, not Royal Trader. Royal Trades. Lee James. Familiar faces. Kwang, hello. Hope everyone's doing well. Hope you're all having a good Tuesday. The dollar index actually moved really sporadically on CPI. Bearing in mind, I was not expecting it, to be completely honest. I really thought CPI was just going to be a knockout. I really thought it was going to be just a complete beat, and we're going to see the dollar rally. Now, again, in hindsight, maybe that was a little bit ignorant, but that's what the forecast told me. That's what previous data sort of influenced me to think as well, based on the JOLTS, the previous labor market data. So it was, in my opinion, it was a valid idea. But yeah, it kind of dropped quite drastically. And this is only 5 minutes. So when I say drastically, obviously I'm talking time frame relative. Dropped quite drastically. Then complete correction, then moved back down, and now we've corrected again. So this has been very, very tricky to trade. And I think any scalpers, anyone that was trying to trade this will have just been eaten alive. I think that was a perfect example of why trading news doesn't work that well. I mean, you know, depending on strategies and things, but generally speaking, I think it's very, very difficult. Anyway, on a better note, I've got this position on New Zealand yen. Let me show you the entries for that, just so you know you've got the trade there. This is obviously MetaTrader 5. You can see my initial entry here. I scaled in here. So the initial entry stop loss is the second one. The stop loss for the scale in is right here, just below my first entry. So this is quite nice. And the New Zealand yen is also top reading on the Edge Finder. So thank you to Edge Finder for that one. So this is pretty much one of those trades where we can just set and forget, as Alex G would say. I'm sure we all love that, Alex G. So we just set entries, look for the breaks of structure, or breaks of structure, not in ICT terms. I mean actual structure in terms of supports, resistances, supply, demand, whatever you want to call it, is fine. Wait for that break and retest, which we had. Enter on the retest once we start seeing wicks to the downside, showing buyers are stepping back in. The fundamental is still bullish, as I just showed you on the Edge Finder. So yeah, we just let it go. The yen is the yen is also very fundamentally weak right now. The Bank of Japan has absolutely no room to to hike rates, as I sort of previously thought they would at the start of the year. But then, of course, we got tariff news, and that was all up in the air, and it was. Yeah, the Bank of Japan's not doing hot right now in terms of their path to normalization. I think they will get there, but yeah, right now it's tricky for them to do so. The other position I'm in is this Euro Pound DCA position here. So scaled into this 4 times. I added in the final position this morning, actually, when we had the spike to the upside. I think it was actually right on CPI or just before CPI. So I'm essentially, the last entry is at this double top, expecting us to have some sort of mean reversion from here back down to this 200 moving average. However, if we don't get that and this trade is just done and I was completely on the wrong side, fine, cut losses at 0.88 and we'll call it a day on that one. So that's the only 2 trades I've got running, New Zealand yen and the Euro pound. So yeah, that's pretty much it. My watch list is quite bare. Swiss yen, I was looking for a pullback to go long, but this market is just, it's like it's taking Adderall. It's just running nonstop. There is no way to get in here. Also, before someone asks, I'm using the Elliott waves. I think these are Elliott wave lines, but I'm just using them to mark up like price movements. It's not actually Elliott wave analysis. Nasdaq, same thing. I was expecting to have some sort of pullback. Again, based on sort of hot CPI data that I was expecting to get. I thought we could have got some dollar bulls. I thought we could have got NASDAQ pullbacks, but of course, that's not happened. EuroCAD, I still like this idea, I think. Yes, so EuroCAD is still still bullish on the Edge Finder with a score of 8. So fundamentally speaking, I'm quite happy to take this. I think we had positive data for Europe as well this morning, or Germany. I can't remember exactly. So yeah, I'd be quite happy to take this one. I think if we can get a bounce off this, hold on, sorry, let me zoom out a bit. We can get a bounce off this previous structure. This would also line up really, really nicely with the 0.5 pullback level or the 50% pullback. And then I'd be taking a long off there. So again, keeping it very, very simple. Pound New Zealand. I think we can all agree the pound is in a very, very tough spot. And I think, I'm not sure what the max reading is actually. I assume it's not 12 because obviously COT is 0. We've got a couple of zeros in here. But yeah, Pound New Zealand is definitely something I would be interested in shorting. It's yeah, interesting to say the least. I mean, we've got the Bank of England that is, we are expecting them to cut rates. We've got the RBNZ that's remaining pretty firm on holding rates. So we do have that central bank divergence. We've got the fundamental data that the Edge Finder is telling us that this market is valid to short. So it's now just a case of waiting for some way to get in. So either we have something like this where we pull back up into sort of this range area at the top of the range, or we have more of a break, retest, and then continuation to the downside. Either situation's fine. I just need to see one of them play out because at the moment, I can't really justify selling here because obviously it's a double bottom. If I sell here, there's always the risk it comes back up into the top of the range. So I'd rather wait for either a clear break of the range or to sell the top of the range. CAD yen was also a good long. Yeah, I think a lot of the yen pairs have provided good longs, really. It's been very, very easy, actually. As long as you were able to flip your idea, because I think a lot at the start of the year, a lot of people had the same idea of the yen actually gaining strength. I was on that train as well. I saw quite a lot of people on Twitter with the same idea. So as long as you were able to pivot from that idea when the data just stopped supporting it, then yeah, I think yen longs were pretty much a no-brainer. So dollar yen is another one I would love to jump into, but I haven't got the pullback that I need to see. So I would like to see this pullback on the H4 to 200 moving average, then a continuation higher, or as always, look for the break, which actually we are doing now, then the retest of this level and a continuation to the upside. I think yen shorts and I'd say yen shorts across pretty much all major currencies are pretty simple right now. I'd say it's one of the easier trades you could jump into. Is of course just waiting for the entry to appear. Euro Swiss, I'm not that interested in right now. However, if we do see escalations in the trade wars, I think Euro Swiss could be a nice option. And pound dollar, finally, I really, really like pound dollar. So you can see I was already looking to take this trade. Marked this up on Sunday. However, it's not really given me anything to actually trade from yet. So if we can see a retest of the previous low, this would also retest the 200 moving average, and then of course the continuation to the downside. That would be great. So I'll be selling any upside moves that we get on pound dollar really at the moment. We've also got the moving averages that look like they're about to change trends. So moving average crosses get a lot of hate, generally speaking, across the retail community. So you would never trade. So let's say these moving averages cross tonight or later today. That doesn't mean we go and sell euro dollar. The way I use a moving average cross is purely to say, okay, from a statistical and from an objective point of view that can't be argued, the trend has changed. And obviously, it depends what moving averages you use and that type of thing, but the ones I use indicate it quite well. So when these cross, that will tell me that we're now in a bearish trend as opposed to an uptrend like we see here. So then I would just look to sell the pullbacks and keep it very, very simple. So that's that. But that's pretty much it on my watch list. There isn't really anything else. How's my DAX scalping testing going? You know what's funny? I was in the Discord this morning. We were doing some live trading on these markets, and I got whipped out. It was really, really bad actually today. So for anyone that doesn't, I'll keep this quite short because this isn't on normal topic of swing and fundamental. But what I'm trying to do at the moment is a bit of a side project for when I'm not actively trading or doing anything else. I'm trying to build a mechanical strategy that is pretty much just reliant on session momentum. So the idea is we draw up the 15-minute candle close on London, wait for the break, whether it be above or below, and then we trade into that direction. It's just capturing the momentum. But then, of course, you get situations like this where you just end up getting caught in a fake out. And then the same thing happened on the DAX, which was really, really frustrating here. So we closed above and then I got caught in a fake out. But I do want to just specify this isn't live trading. I'm not putting, I think I've had $20 on the line for both trades this morning. So lost $20. So it really wasn't a problem. It's more just to test how it works on live accounts. But yeah, generally speaking, it's working quite well. I've not noticed any real issues other than the fact that the risk is that you get caught in these fake outs and the market reverses. So I need to figure out a way to filter out the low probability trades, but I've not really found out the best way to do that just yet. But of course, if there's a solid way of defining a false breakout before it happens, I think there'd be a lot of people making a lot of money. Hi James, regarding the school run strategy, the one you're testing at the moment, when the London opens at 8 a.m. trading DAX 40, is it the second 15-minute candle? Yes, so I will take, Yeah, so I'll take the 8:30 candle, which was this one. However, I think I may have gotten this wrong. I was talking to a friend of mine this morning that trades the same thing, but he trades it properly. It's like an actual strategy he uses. And he was saying that I should be using the 8:15 candle. So I think I may have actually just been getting my own strategy wrong. But as I said, it's derived from Trader Tom's strategies that I'm trying to develop further. So, if I've been getting it wrong, then my bad. Dollar moving hard. Oh, wow. Dollar is moving. Oh, nice. Let's have a quick scan. Let's have a look at euro dollar. Let's have a look at gold as well. Yeah, euro dollar's moving very, very nicely here. Obviously, if you're a bear, if you're a bull, not so much. Gold's coming down. Would I like to be a buyer of gold? Technically, yes. I do quite like gold from a technical aspect now, because we've broken out previously. I was very neutral on gold because we were stuck, obviously, in this sort of wedge. So I needed to see some breakout either way, just to tell me either buyers or sellers who is in control. So clearly, buyers are in control as we broke to the upside of this wedge. We do kind of have a trend here. It's very, very minor, though. And similar to what I was saying with euro dollar, with gold, the edge finder's got a reading of 5. So it is bullish, but it's definitely not it's not a market that's screaming to buy, which is unfortunate because gold has been parabolic for a long time. So it would be, in my view, it'd be a little bit silly to just be a blind seller. Obviously, if you've got a core reason that lines up with the way you trade, that's completely fine. But I think just selling gold because it's high would be very, very silly. So as I said, inflation's relatively sticky. I'm not confident we're going to get rate cuts really until September. So we'll see. But yeah, I'm not really leaning either way. I think I'd lean more towards bullish than bearish, but I'm not bullish enough to take a position, if that makes sense. Why is gold caught at 0? I think for gold, you would want to use put to call rather than not COT. Oh, wait, hold on. Let me reread your question. Am I getting confused? Why is gold caught 0? That's a good question. It's also 0 for pound New Zealand. Let me have a look at gold. I'm not sure if it's the date that actually is just flat gold, which I can't imagine it would be. It's normally very bullish on gold. I guess because the weekly change was negative. However, generally speaking, or overall, it is still very bullish. Okay, it's indicating neutral. Yeah, okay, that makes sense. The crown symbol by his name. I don't see a crown symbol. Must be a YouTube thing. Is he a mod or something? Okay, right. Is there any market requests? As I said, I haven't got anything planned for today, so we can just see what's going on. I guess we can have a little ponder around the markets, have a chat. Euro dollar, sorry, not euro dollar. I'm so used to saying euro dollar. Dollar yen. We've had a very decisive break here. So now, in my view, it's just a case of how does price react at this next high? Because if I'm looking to buy, I either need to see the retest, as I've already mentioned, or we break above here and retest here. So if we are retesting this level, stop loss needs to really be below the second one, just in case we do come lower and end up retesting this level and continuing higher. The only downside I see is just this 200 moving average is very deviated now from price. So that leads me to expect some sort of mean reversion here. Nothing big, nothing crazy, just some sort of pullback, whether it be natural, news, whatever, don't care. But something to the downside just to sort of allow some buyers into the market, and then we can roll from there. DAX long-term break all-time highs. You know what? I'm very, very salty about DAX because this could have been such a beautiful trade. I just didn't get into it. So what's going on with DAX? Let's have a look. It's bullish. We do have is it 6? Yeah, we've got a score of 6. Retails are long, which does make sense, actually. Retail sales negative. I don't see anything really that big or that important that's standing against DAX. Let me just have a quick think. Is there? I don't really think there's anything too crazy, but let's just check Forex Factory and make sure. Don't we have IFO? I'm not sure if IFO has already happened or if it's coming. Does that do that? Slide filter? Let's have a look at this month. Okay, when is it? Yeah, I'm not sure I can see it. Anyway, whatever. We're not going to spend all day looking at Forex Factory. So yeah, I think generally speaking, I would want to be a buyer of DAX. So we could see something like this, just a continuation of the same price style that we've been seeing. What I mean by price style is sort of just the behavior that we've seen recently on the H4. It's sort of just pulling or moving to the upside, pulling back, move to the upside, pull back, move to the upside. Are we going to pull back now and continue? Maybe. But yeah, I'm not willing to be a seller in the DAX. Just yet, anyway, especially if the edge finder is bullish. So I think we definitely could see new all-time highs in the DAX. However, obviously, it's a very, very extended market. Now, it's dangerous to say that because this is obviously the weekly time frame, and being overextended means a lot less on the indices markets compared to FX markets. And the reason is because FX values do play a huge role. So you will never, well, you will not see the dollar, for example, just run and run and run. You won't see the same thing with the euro or the pound. They won't just run continuously to the upside or the downside. Whereas things like DAX, US 30, even gold, theoretically they can. They're completely different. So yeah, being overbought on a high time frame doesn't mean too much. So I'm not going to put much weight on that idea. The daily looks fine. So let's see. Actually, can we get something like this? So we could see a pullback into our daily fib, which would line up quite nicely with previous structure here. I'm using the magnet tool. Yeah, something like that. Retest into these levels, I think would be a very, very good buying opportunity. Actually, I'm going to set an alert here. Let's do that here. So yeah, if we can get something like this, so price is broken, could come down, retest, also retrace 50%, then continue higher. I think that would be a very, very solid entry opportunity. Guess who took DAX? I know you did, Royal. You're always ahead of me on these trades. Correlation between DXY and GP USD and euro dollar. Paul, what do you mean? So the euro, if you're looking at the DXY, the euro makes up about 50% of it. So if you want to get a complete view of the dollar, you'd want to use an unweighted chart. And I'm going to be honest, I can't remember what the, hold on, let me just quickly, unweighted US dollar. So essentially what you do, an unweighted chart basically just shows you the US dollar value without the input of the euro, the pound, but I can't remember the formula. I might get that ready for next stream. I don't have it on top of my head, but it's something like euro dollar minus pound dollar minus US dollar or something like that. But yeah, I'm not sure what you mean by correlation. Obviously, if the dollar is rallying, you would generally expect euro dollar and pound dollar to sell off and vice versa. What do you think about Nikki? Check COT data. It's not really looking like they're buying. What do you think about catching some pullbacks? Trying to aim for previous highs. Good question. Nikki is not something I really look at all. Well, let's see. Well, first of all, it's not on the edge finder. So automatically, I'm not that interested in it. But let's have a look. What's going on? It's got a score of 2. So I suppose that at least there's that. But to call, not really saying anything, to be honest. COT is flat. It's pretty mixed, actually. Slightly weighing towards bulls, but nothing overly impressive. Seasonality is quite nice. So how would I go about that? I think buying makes sense here. Yeah, it's tricky. I don't like it, but I just don't really see anything else here that would make me want to buy, or sorry, no other technicals here that would sort of invite me to be a buyer either. So I think really you'd have to go to higher timeframes like daily, or even lower timeframes like the H1 if that's your style. I suppose this is a bit of a red flag, actually. We are sort of stuck on these daily highs. We don't seem to be able to break much higher. So with that in mind, actually, I'd be very, very cautious of this range here. So let's get rid of these. So when was this from? This is from 2024, October. So we've been range bound for almost a year. I say almost a year, slightly less than a year. I wouldn't want to be a buyer, to be quite honest with you. I would only buy if we would get the daily back into these previous lows, then maybe take profits here at these highs and just expect this sort of ping pong price action to continue. Obviously, unless there is some catalyst to change that price action and to start moving the markets in one decisive way. But yeah, it doesn't interest me at all, to be quite honest. James, is there such a thing as out of session? Like some pairs are more session specific than others? Yeah, absolutely. So the pound, the euro do particularly well, obviously during London. Obviously do well during New York, but I would put that more down to the US dollar. And yeah, I don't know. Hold on, let me have a quick think before I give you a real answer. I suppose there technically isn't an out of session because we have sessions all the time. Obviously, we've got London, and then we've got New York and London overlap. Then the markets close after New York. Then we've got Sydney and Tokyo. Then it leads straight into London. So obviously there is technically no out of session. However, things like the Nasdaq and the S&P and the Dow move significantly less during London than they do during New York, and vice versa. FTSE and DAX move significantly less during New York than they do during London. Tariffs on Japan are not letting it run higher. Do you mean inflation, Royal? Oh, sorry. Yeah, I see what you've been talking about the Nikkei. Get some kind of deal. That's a good thought process. Yeah, potentially. If you saw developments in tariffs, then yes, maybe buying the Nikkei could be a good option. But yeah, again, it's just not something I really pay any attention to. So I'm not that wise or that knowledgeable about the Nikkei, to say the least. So is there anything we've missed? Where's my edge finder? There we go. Let's have another quick look. What else have we got? So we've pound New Zealand recovered. Pound Swiss. Let's take a look at pound Swiss. Yeah. So I was looking to go short, but clearly this analysis is outdated now. It's tricky because in markets like this, it's very clear to be a seller, but there is no real way to draw a fib. I suppose the real high would be here. But even if it did pull back 50% here, this is just still a little bit too low for me to sell. So I think the only way I could really be a valid seller here is if we pulled back into this 200 moving average. I could then be a seller at that point. But yeah, from a technical view here, there's no way into this market just yet, which is unfortunate because there really hasn't been much of an entry. I suppose since June, so probably the past 1 to 2 weeks, there really hasn't been a way into the market. Yeah, no problem, Lee. I'm not sure if I actually answered your question. In terms of currencies, I would say currencies move pretty much all the time, except overnight. So overnight to me is Asia, Sydney. But yeah, from 8 a.m. my time when London opens up until I'd say 6 to 7 p.m. my time, when obviously London's closed and New York's wrapping up. That's kind of when we start seeing dead volume. I don't like how much Swiss franc has strengthened. Leverage funds are very exposed to CHF. Yeah, that is a bit of an issue because what we want to be cautious of is too much Swiss appreciation and then the S&P intervenes. I don't think we're at risk of that just yet. I've not heard any words about it recently. I know that theory was flying about when we had Trump tariffs and we saw the S&P dump 20%. And the Swiss obviously gained significant value. And in a lot of institutional reports, they were talking about a bit of a concern about the Swiss strengthening and the S&P intervening. Since then, I've seen nothing about it, not a single word. So whether that fear was temporary and the idea is gone, or whether it is still a concern, but they don't care, I don't know. But yeah, I wouldn't be too worried about it just yet. I think there would be signs before that happened, but we can but see. Okay, let's go back. So pound New Zealand looks good. Pound Swiss looks good if we can get a pullback. Aussie Swiss, I'm not really keen on selling the Aussie. Actually, they had a hawkish cut. Oh no, sorry, they didn't have a hawkish cut online. They held rates. So I'm not really interested in selling the Aussie, to be honest with you, until we have a next development. CAD Swiss, I'm a bit unsure on oil, so that kind of writes off the CAD. Aussie New Zealand could work, but both central banks are on pause or on hold. So I don't really have that central bank advantage with either party. The dollar Swiss, I'm not sure I want to be a seller of the dollar just yet. So with sticky inflation, obviously the dollar's done very well here. I am not sure I am willing to be short dollar, especially off this reaction here. I think what's happened, and I've been saying this quite a lot, I think the dollar has been front run heavily. So obviously we had trade war uncertainties, which is completely valid. The dollar sold off. But there was also, the US is going into recession, US inflation, labor market's weak, sell dollar, blah, blah, blah. Fed's cutting rates. Where is all that? Tariffs are pretty calm right now. I don't really see a massive problem with tariffs. The Fed's on hold. Inflation is sticky. Labor market's relatively okay. I just don't see a reason to be really that bearish. Now, again, I just want to say I'm not super bullish. I'm not sitting here saying we're going to see a massive reversal in the dollar, but I just don't want to sell the dollar just yet. I would much rather see some sort of correction, whether it be just a very, very simple thing here, and we just come and retest these lows, and then we get some sort of development. I don't know what it could be. Anything. Fed is more dovish, or some other data release that's bearish for the dollar. And then we start seeing pressure come back on the dollar. Then yes, maybe I'll be a seller. But right now, I think it's too early to be a buyer, and it's too late to be a seller. That's the problem I'm facing with the dollar. Sell the USD JPY. Why would you want to sell dollar yen? We've just had pretty decent inflation, and the dollar is clearly doing very, very well. The yen is very weak fundamentally. So what's the reason? I'm not trying to be stubborn or what's the word? I'm not trying to be like a thorn in your foot, but the reason I'm asking you what's the reason is because you should come on a stream and say, I'm selling dollar yen because of this and this, not asking me if it's a good time to sell dollar yen, because I don't know why you want to sell dollar yen. Is it a 5-minute trade? Is it a scalp? Is it a correction trade? Are you looking to swing? Are you expecting worse data for the dollar or better data for the yen? Anyway, back to that, James. The currency strength meter is showing AUD NZD as the strongest currencies. Is it? Let me have a quick look. Actually, that's something A1 guys could add, is a currency strength table. Yeah, so AUD is strong. Actually, yeah, that's pretty much what I would expect. Australian dollar, as I said, their central banks held rates. There is, in my opinion, it would be a little bit risky to sell the AUD. NZD also is holding its weight. We've also just had pretty good news for the dollar. I mean, wasn't amazing, but sticky inflation obviously reduces those rate cut prices, or the rate cut pricing in has been reduced a little bit. Canadian dollar is doing very well. I'm not sure why. Do we have CAD data come out? I don't really pay any attention to the CAD either. My focus day to day is euro, dollar. That's pretty much it. Euro, dollar. Sometimes the pound. My portfolio is pretty flat at the minute, actually, so I need to get back into some research and find the next focal point. So what day is it? 15th of July. So what have we had? Oh, we had Canadian inflation as well. Well, that's quite bad. I didn't know that. So what did we have? Oh, this is German data. Economic sentiment is pretty strong, actually. Okay, so CPI for CAD was on target month on month. Median CPI slightly hotter at 3.1. Trimmed on target as previous. Actually, inflation wasn't that great. It was pretty flat. But yeah, anyway. Almost 3 p.m. in the UK. It is indeed 2 minutes. DAX said, nice move down here. Dollar's doing really, really well, which is very good to see from my view. Let's have a check on dollar crosses. So dollar yen moving very nicely. Dollar Swiss is up. Dollar CAD's up. Obviously, all expected if the dollar's running high. Pound dollar has taken a serious hit there. Euro dollar, it's coming in to quite a significant level of 1.16. So while I'm not significantly bullish, I think it is very important to acknowledge that there are smart money wanting to buy euro dollar at 1.16. The orders are in. So it might be an option to just buy. And that's a little bit of a risky thing to say, obviously just buy. But I'm considering buying euro dollar here. Not right here, but like towards 1.16. So around here, it'll be coming back into the 200 moving average. Stop loss is tricky because the only technical option here really is below the recent low, but that's a bit too wide for my liking. So it'd have to be maybe here. Then we look for a run higher. Tony, I use a 200 and a 50. So the red one here is 200 EMA and the blue one is a 50 EMA. Canada is doing well on jobs data, if I'm not mistaken. That's why it cut strength last week. Okay, that would make sense. Yeah, well, don't worry. I'm at my desk. I'm not 100% sure, to be honest. It's one of my downfalls as a trader, actually, is I quite often focus on one thing. I'll focus on that one thing very heavily until I'm no longer interested. Like a child, really, I'll be honest. It's like I'll find a toy, I'll love that toy for a while, and I get bored and move on to something else. Like the dollar has been like the only thing I've looked at for the past 1 to 2 weeks. So I've got no idea about anything else. Obviously, euro dollar, yes. Pound dollar, slightly, yes. But when you go to like CAD, New Zealand dollar, Australian dollar, I don't have all of those details at the top of my head. But you know, I'm fine with that because it allows me to focus on one thing and understand all of the points around that trade, whether it be positive or negative, without being distracted by other things. So for me, I'm quite happy with that. But it's probably not the best idea to do that. So Euro CAD. So if Canadian dollar is doing well, kind of puts me off being long on Euro CAD actually, unless we do see a very clear retest at this point, in which case I might take the risk it for a biscuit. Euro Australian dollar. Hmm. As I said, I'm not a fan of shorting the Aussie dollar, but I don't mind this because there are clearly still sellers in the market for euros. Sorry, clearly still buyers in the market for euros. So this may actually not be the worst trade. I'm going to put this on the watch list because I do quite like it, but I think I'd have to do a bit more research to be able to justify shorting the Australian dollar after sitting here and saying that I'd like to be a buyer. Okay, Canada unemployment dropped. I see. That makes sense. Appreciate it, OT. Okay, let's just do a quick checkup here. Euro pound doing nothing. New Zealand yen not really moved that much. What else do we have? Swiss yen, can't trade that. Nasdaq, can't trade that. Okay, yeah. Euro AUD. How many Euro AUD? Draw a channel? How do you mean draw a channel? Do you mean a longer term one like this? Let's see. Let's use a regression trend, keep it simple. Oh yeah, let's see. Yeah, maybe. I need to go and have a look and see what's moving, because this is one thing. If the edge finder is bullish on something, that's great. So that can tell me, okay, an entry is valid at this point, and maybe the next couple of days, week, great. But I need to be able to have a more long-term outlook. So I need to say, okay, what's the trend of inflation? What's the central bank's focus? Is it inflation? Is it labor market? What's going on there? Then I need to take notes and say, okay, well, the next unemployment releases at this point, so maybe that would be the catalyst to get in, whatever it may be. So I just need that. I need to build a longer term view on Euro AUD before I actually pull a trigger. Let's see, I've got about 10 minutes left, so if there is anything you want me to look at specifically, let me know. If not, that's completely cool. We can keep yapping, and we can just do a final review. RBA expected to cut rates. Yeah, let me just have a quick look at what the RBA is saying. Just let me have a log into the terminal. Give me a second. Sweet. Oh no, wrong password. No, okay. RBA, so let's have a quick checkup. RBA holds rate steady as August cut, inflation and global trade tensions remain key. Yeah, so the RBA's dovish to neutral. RBNZ holds OCR at 3.25 in July, adopts slightly more dovish tone, markets eye 2Q CPI 21st July, and Labor Day to 6th of August for clues on August cuts, also dovish to neutral. Interesting. What about the ECB? ECB maintains dovish stance, low rates. Yeah, they're dovish as well. Fed's relatively hawkish, but not overwhelmingly so. Okay. So I think I said this on my stream last week, but I'm in a tricky spot at the moment because I like to revolve my trades around central banks. So I like to be able to say, okay, central bank A is hawkish because of this and this is their focus. The central bank B is neutral to dovish because of this and this. And then I can start building a trade idea around it. But at the moment, a lot of the central banks are just on hold. There isn't really anything for me to trade or to do on there or on the charts. Yeah, the dollar is moving. The dollar is doing very, very well. which makes me happy because my forecasts have been pretty on point so far. So I started being a bull on the dollar on this candle here, so on the 30th of June. So for 2 weeks, I've been contrarian bullish on the dollar, and it's so far proved right. However, it's a little bit early, but so far so good on the idea. I'm just trying to see. So oil's not doing anything. Oil's just stuck in this pretty tight range. So as far as I'm concerned, there isn't anything to do because I don't want to be involved with a range trade. It's not my style. I like to trade in trends. So until we see a solid reason to trade oil and we also get a breakout of the range, then I can start looking to trade. But until then, sitting on the hands. New Zealand dollar taking a dump. New Zealand Swiss, New Zealand CAD not doing anything. Pound yen. Pound yen's moving nicely, but as I said earlier in the stream, that a lot of the yen pairs have been pretty simple trades, really. It was just a case of buy the pullback, which I think I might do again on the next yen pair that does pull back. Euro yen seems like a really good one. CAD yen and Swiss yen seem like the optimal choices. But I think they are so strong, I'm just not getting the pullback. So it makes it very tricky. Gold and silver. Good point. I've not checked silver in a while. I've remained bullish on silver, and I've been saying pretty much all year that my target was $40. And I would love to be a buyer, but I just need to see a pullback towards $34 before I could justify being a buyer. I think it's just a little bit extended. We've seen 2 wicks to the upside, signaling that buyers have obviously stepped in, trying to get towards 40. Sellers have stepped in and pushed back down. The US dollar is moving quite strong as well, so it might give us an opportunity for a little bit of a pullback here on silver to enter. But whether we will get $34, I think I might be a little bit optimistic to try and expect that. But yeah, I am very bullish on silver long term. In terms of short term trades, I'm not really too interested. But yeah, if I could get a solid longer term entry on silver, I'd quite happily take it and just sit. When it comes to gold, however, I would rather be a buyer than a seller, but I don't have a reason to be a buyer on gold at this point. So you could argue rate cuts, yes, but I would say rate cuts are pretty much priced in. The only thing with rate cuts is, are they going to get priced out? That's my concern. I think that everyone front ran rate cuts. Obviously, you can see that in the dollar. We had lots of concerns here. Rate cuts, inflation, labor market, trade wars, blah, blah, blah. Obviously, the gold did very well off the back of that. Now I think it's in price. I think the only thing that can happen is it gets priced out or increases. So I don't think saying that the Fed might cut rates in September is a great argument, because I think the markets expect it. That's not an edge. The markets aren't going to say, oh, wait, September, yeah, maybe we should expect a rate cut. Then it rallies. It's already happened in terms of the market's pricing. Trade wars aren't escalating, or the trade war's not escalating. There's no escalations in the Middle East. Russia-Ukraine's flat. I just don't see anything really for gold right now. Do I see gold down to 3,000? No, I think that's pessimistic thinking. So as I said, I'm not a bull, but I'm also not going to sit here and be a perma bear, because I think that, being a perma bear on gold has been a very expensive mistake that people have made over the past year, 2 years. So 3,000 could happen, absolutely could happen, but I don't want to sell gold with the idea of 3,000, because right now that idea is not backed up by anything. That would be the same as buying gold saying 4,000 is going to get hit. Could happen, but when and why, I don't have the answer to either of those things. But yeah, I think if we could establish a trend on gold, so if we could start seeing price move decisively higher, then yes, I might buy it just from the momentum and obviously buying into the overall trend of gold. Great, but I'm not going to buy while it's still stuck sideways, really. So if we look here, although we've broken out the wedge, we are still sideways. Nothing's really changed in terms of the price action here. So yeah, that's my stance on gold right now. Okay, let me check the schedule. So I've got about 4 minutes left, and then Chris Pulver is coming to take over the show. Let me just take a drink. Sweet. Also, actually, what I've forgotten to do is look at COT. I think we did see an increase in sellers on Friday for the dollar, but it's not a huge deal in my view. So obviously we had record short positions for the past decade. So this 59.25 has been the most sold the dollar has been over the past, was it the past 10 years? I'm fairly sure, don't quote me on this, but I'm like 90% sure the dollar has not been that sold for over the past 10 years. And we have seen that stress reduce a little bit. However, it's not fully gone. Obviously, we are still majority short in terms of smart money or COT data. ZAR, surprisingly, I don't know anything about the ZAR. I don't know the first thing about it. I don't even know what the interest rate is over there. Got no idea. I don't trade it, don't look at it, don't care about it. But it is the most bullish asset here on COT. Gold, obviously, that not a surprise. Silver, also not really a huge surprise. The yen, however, 76% long on yen when all of the yen assets, all the yen crosses are rallying higher, which is strange. Tariff and fiscal uncertainties, central bank buying dips, supported gold, however, on a technical basis. There's a ascending wedge on daily charts, just from upside. Yeah, actually, you are right. The debt problem in the US could be a big problem, but again, as of right now, I just don't see. I don't see the reason today to click buy on gold. Is what I'm saying. Obviously, things can happen in the future that may change that view, but yeah, I'm just not that interested right now. And the central bank buying gold idea, sure, but that is very supportive for a long-term idea. So, if you're buying this dip here, expecting to hold it for the next 1 year, 2 years, great. But for a short-term swing trade for 1, 2, maybe 3 weeks, the central bank buying idea doesn't really do much in my view, because you could have been buying all of this, saying central banks are still buying, chopped up. Could have bought here, central banks are still buying, chopped up, and the same thing throughout all this range. So while it's a good thing to have in your mind, I'm not going to rely on that for a trade idea. Euro, yes, still bought. That's been used as a big hedge against the dollar. Copper, I don't know anything about copper either. It's not in my basket of trades or basket of assets. Nasdaq is 61. CAD very bearish. However, it's gained some significant strength today. So actually, today may be an opportunity to actually sell some Canadian dollar. Obviously, like I said, we've got CAD strength into today. So if you do have a reason to sell it, maybe selling the CAD rallies might be an idea. Similar thing with the Australian dollar. If we do see any rallies there, Swiss. Okay, so yeah, Swiss net positioning decreased. Net change is still bullish. Interesting. Okay, sweet. Every bonds was 3%, yet the yen remains weak. That's yeah. I think the problem with the yen is just a lack of confidence. So there's just. Oh, sorry. Give me 1 second. I just need to check this. Yeah, I think the problem with the yen is just uncertainty. It's just fundamentally weak. So why would you, right now, if you're an investor, why would you go and buy the yen over buying something else? I think that's the way I'm looking at it, because the interest rates aren't there. You've got negative rates, so you're losing money by holding yens or holding yen. It's just not an attractive currency right now. I think that will change as the Bank of Japan starts to hike or continues to hike out of this pausing period. But yeah, at the moment, it's just not there. Kevin, about 2.5 years, give or take. But yeah, that would be ignoring sort of the break period I took as well, because I stopped trading for quite some time. Basically, what happened is I was working a night shift. So I had the day of the night shift, sorry, the day after the night shift off. So I was very tired and I was trading, but I was trading one lot on US 30 with like 5,000 in my account. And I didn't know anything about trading. I was like, oh, guys on Instagram have Rolexes and yachts from trading Forex. I'm going to do the two. So I was just buying, selling, buying, selling. Lost everything within about 24 hours, up all night, ruined my day off, then had to go to work the next day after the day off, after I was trading, up all night as well, trying to deal with the position. And that was an absolute nightmare. So from that mistake, then I was like, you know what, I just lost everything. Because bearing in mind, it was my 9 to 5 job. So 5,000 at the time was like, that was my life savings. So that's all I had. So I can't, I cannot afford to try. I have nothing to trade left. So I took a break, saved up some more money, and then went again, and went about it in a more educated way. It was like, okay, well, what I was doing wasn't working. So what does work? And then I started trying to sway more towards, why do the markets move? It's not just, oh, it's moving up. It's like, why does it move up? And that obviously then led me to economics, and then dived into that rabbit hole. And then obviously it was then trying to apply that knowledge onto the charts. So yeah, it was a long period. Dollar's continuing to rally, which is interesting. I think we're now seeing a little bit of a short squeeze. And when I say short squeeze, I don't mean like a GME situation where, retailers are taking out institutions. I don't mean that. What I mean by short squeeze when I say that is more a case of people that have been shorting this period here, expecting low inflation, rate cuts, poor labor data. Like, okay, strong labor data, sticky inflation. Let's unwind some of the shorts we've got going on. Maybe we can buy in, and then yeah, I think that's what's going on here. So dollar strength, not a huge surprise. I think I'd said it was surprising, which I don't know why I said that, but anyway. What do you think about those mentors who teach SMC? No, it's not legit. The thing is, you can catch 1 to 8 trades. You can catch 1 to 100 trades, but the payoff is the win rate. So there is absolutely nothing stopping you going for trades like this. So let's say you sell here with a stop loss right at the wick here, and then aiming for something like that. There's nothing stopping you doing that, and you will do that maybe one time out of 200 attempts, or maybe even more. I don't know. I've never tested a strategy like that because I've got no interest in it. But the problem is, as I said, the win rate is incredibly low. And that's just it's like a scale. You cannot have incredibly high R&R and an incredibly high win rate. It just doesn't work. So to have a strategy like that, you have to be incredibly resilient mentally, and essentially completely disconnect from everything in terms of emotion and money, which obviously you should in theory do as a trader anyway, but it's just a completely different ball game. It more leans on the side of gambling, because even if you've got a good reason for the trade, to say, to have a stop loss or an entry here and a stop loss there, that the odds the price isn't going to come any lower than this point, and you're putting in 1% risk, to me, that's gambling, which is why I like to have a reasonable stop loss. I don't like to have massive stop losses, because obviously that ruins the risk to reward. But a reasonable stop loss to say, okay, if price comes up here, then it's broken the 200 moving average, it's broken the 50 moving average, it's broken previous structure, and it's then broken this high as well. All of my protective layers, if you will, have been broken. So I don't want to be in the trade anymore. But if then I had a stop loss here, or let's say I entered here, stop loss here, I don't have any of those layers to protect my stop getting hit. I don't allow the market any room to breathe and move. So again, what I'm trying to say, it can work, but you've got to accept that there are a lot of downsides to it, just like there are a lot of downsides to having large stops, but it's just one of those things. However, my actual point is those 1 to 18 trades or 1 to 8 trades look amazing on screenshots. They're great for marketing, but is it a repeatable strategy? Can you copy and paste it, or can you at least learn it? I'm going to say no. 1 to 8 happens a handful of times a year. You know what, OT? One of the things I'm envious of Nick about, actually, is his ability to trail stops. I don't do that. I'm completely happy with doing it because it's worked out for me quite well. But for example, let's say I was in this short, I would be taking profits at this support just because that's the way I trade. It's the way I learned to trade. It's just what I've always done. It's just my style. However, there are situations where, let's say Nick was also in the same trade, where he trail stops and he could catch this entire move, and that would be a 6.66R, and I would have taken like a 1.88. So I made money, Nick made money, but the idea of trailing stops continuously, I can't do that. I don't have the patience for it. I wish I did, but again, it's about being able to recognize where are your shortfalls. Can you fix it? Can you not? Do you want to fix it? But that's one thing in trading. If I could change something about myself or my it's not even the strategy, I guess more my mental approach is just sit. Hard trail stops in Forex. I can do it to a point, but I don't know. I cannot tell you what it is, but I just don't like to trail stops. I wish I could, but again, it's just not me. So I'm quite happy going to 1 to 1s, 1 to 1.5, 1 to 2, and that's pretty much all I'll do. If a trade gets to 2.5%, I'll probably just cut it there. Some people might view that as a negative. I view it as a positive because then I know my expectancy. But anyway, let's move forward. Okay, let's just again quickly read. Euro pound's moving nicely, which is expected. We are, as I said earlier, the euro does make up about 50% of the DXY. So if we are seeing a pump on the DXY, we're likely to see an outflow then of what's happened there? An outflow or capital outflow from the euro. New Zealand yen sadly hasn't pushed much higher. I'm saying sadly, it's already a very, very clean trade, but this one's going to be long. It's going to be a long hold because this isn't my trade. This was sent by one of my traders. So I'm just going to let it run, follow his instructions on that one. Do I go on lower time frames to execute or just the H4? Oh, wait, hold on. Sorry, I've just got a message 3 minutes ago. Let me just quickly answer this question and then Chris will come on. I do use lower time frames. So if I'm watching the H4 for an entry, I'll go down to the H1. I'll watch for bullish or bearish candle close. Then I'll look to enter on that. And then I'll actually manage to trade on the H4. The H1 is just to get a better entry where possible. Anyway, guys, Chris Pulver is here. Chris, I apologize. I didn't see the messages. I left you hanging for a couple of minutes. My bad. Anyway, guys, have a good day. Enjoy the rest of your weeks. I'll speak to you very, very soon. Stay safe and don't get margin called.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Tuesday. Welcome to CPI extravaganza. Here's the CPI numbers this morning. Month over month, forecasted for 0.3 came in 0.2, but higher than previous at 0.1. Core CPI year over year, forecasted for 3%. Previous was 2.8, came in 2.9. So less than forecasted, but more than previous. Headline CPI forecasted 2.6, previous 2.4 came in 2.7. Higher inflation. Go to your edge finder, higher inflation. You're going to see the trend is higher. Okay. Why is the market gapping higher? It's crazy. But I still think I said this week in some of my other videos, like 6,300 is going to be a key level this week. If we can't really crack and stay above 6,300, I think that's a spot for prices to start falling a little bit, start turning over a little bit. Let's go to inflation data here. Go to our headline CPI, and here's our 2.7. So if we zoom out, let's go to last 5 years. There we go. So when everything started to kind of normalize, that would have been summer of 2023 after the peak in 2022. 3% is pretty much where we're going. And we have 1, 2, 3 prints, again, trending higher. Does this mean that this is a big second wave of inflation? Not necessarily, but this also gives the Fed more reason to push back. I am curious if today's futures watch tool, the Fed watch tool, has changed anything at all. It might just firm up that they're going to pause at like 99% for July. Let's see what the probability shows. Yep, so this was 95% yesterday. Now it's 97.4. The Fed is still looking to cut rates here in September. I don't know. I wonder if they're going to. Maybe Powell with, hey, look, our inflation readings and look, all this stuff lagging. I get it, but you're clearly not going to hear anything good coming out of Trump's mouth with regards to Powell. Trump wants a very dovish Fed, period. Some are arguing that that's the right play. I think that is very similar to what we saw Nixon do to seek re-election with Arthur Burns until everything broke and we had hyperinflation that Paul Volcker had to break. I think that Powell is of that legacy mindset, like don't let inflation be what crushes this market. And look, man, we're sitting at all-time highs. I think it's kind of silly to also be cutting crazy amounts of interest rates. So I mean, if we're gonna do like one cut, understandable, but having like, I mean, this is forecasting like 5 or 6 cuts by the end of next year. So we're still of the mindset like inflation is going to improve. Well, we're not seeing it by the little bits here. We're not at target to 2% inflation. We are still trending between like this 2 to 3% area, and maybe that is, even though we're not being told it explicitly, maybe that is the reality of the Fed. If we're staying between 2 and 3%, we can kind of live and accept and operate in a 2 to 3% inflation. It's not that prices are going lower. In fact, they're not going lower. Prices are definitely more expensive across the board. It's just that they're going up slower than what they were. That's all this inflation is. We are just getting a hidden tax every single year at 2.7%. That's what this means. So it feels better to have a hidden tax at 2.3% or sub 2% because you don't feel it as much. But when it's more at the grocery store, more out to eat, more at the pump, all that matters. Okay. All right. So here we are, cracking all-time highs again on the NASDAQ, cracking all-time highs in the S&P. We had some cracked all-time highs, I think, on NVIDIA. NVIDIA had a huge gap to the upside, up another 4.7% on NVIDIA. Impressive stuff. I do have some calls on NVIDIA this week that I want to roll. Right here, I have the 100 shares collar trade. I own the shares at like low 100, so I'm still up a decent chunk of profit. I'm up $3,400. The put is worthless. I'm just going to let it be worthless. I'm obviously behind the 8 ball, like I'm $40 in the money on a covered call. But the best part is I can take this Friday expiration and I can just roll it. So what I'll probably do here is give myself some room. I'll actually look at it right now. I'm not going to roll this until probably Thursday. But if I take, I'm going to remove the put side because that's just going to expire worthless. But the call side, let me do a quick roll here and see what it looks like. So if I roll this, let's say out to August 1st, keep the strike 33 cents. Like that's kind of a crappy move. Let me go out a little bit more time. So if I go to the monthly expiration here, I can keep the strike the same at 130. And this is so far out of the money that I'm probably going to have to go. Let's go end of August here. So end of August, keep the strike at 130. Like I get 100 and, $150, $170 if I roll it. Keep the strike the same, make some more profit. I mean, at this point, it's like it's still way out of the money. If I roll it up here, I pay a debit to roll it up $5. That's really crappy, actually. So I'm not going to go out so far that, well, I mean, I don't know. I'll play around with the roll prices, but if I go out farther, I can roll this out to September, up $2. So that's probably my sweet spot, is rolled out to September. That's another 63 days in time, but that 63 days in time gives me essentially a $2.40 increase. So of all the shares that I have, all of my accounts here have all these accounts that I'm highlighting have some NVIDIA. These were earlier accounts. So all these accounts have NVIDIA. If I take a trade for increase my strike to 132 and grab 35 to 40 cents on the trade, so 240 is my increase on 1, 2, 3, 4, 5, 6, 7, 8, 9. So I make $2,100 just by going out extra 60 days. Like it's okay. It moves the needle. I wish I let NVIDIA run super hot and for a really long time, but I didn't, because when it was down to $100, I was like, well, I'm just going to sell some puts. Now, at the same time, I did just close out a put today. Let me see if I have this in Pulver Alerts. I did close out a naked put on NVIDIA at, as this was dropping, I sold a 70 put for like $3.50, and I closed it out today for like $3.30. So let me double check in Pulver Alerts here. Check on NVIDIA. So I have that was a call Condor that worked out just fine. Okay, this would have been back in March and April. I'm just letting it expire. The trade was originally like a December. I kind of did like a leap, like a naked put leap. So I sold here. So this naked put was a $70 put, pulled in $3.45. I closed it today for 23 cents. So that gives me 345 minus 23, 322 out of a max 345. I made 93.3% of that max credit. So that's a nice little winner this week. So NVIDIA 345 naked put, closed it at 23 cents. 93.3%. So I'm taking that winner, and then here's my shares. There's my collar trade. I'm probably going to roll this one out to September because I get a little bit more time in the trade. I can roll my strike from a 130 up to 132, which gives me a $2 bonus plus an extra credit, and that'll give me an extra $2.40 in all these accounts. So again, it doesn't help a ton, but it's better than like, I'll just take my profit. It's like I can get extra $2,000, and I can keep rolling, keep messing around with NVIDIA. Give the market some flexibility. Like if it pulls back, that's fine. I'll make more money on a call if the price pulls back, which I still think the market pulls back a little bit. Okay, so anyway, NASDAQ is poking all-time highs. NVIDIA is at all-time highs. That's probably why the Qs are up so much. Let's see how the other Mag 7s are doing. Apple sideways. Amazon creeping up to some fresh highs. Broadcom creeping up to some fresh highs. Still overbought. Google doing better. Meta sideways at all-time highs. Microsoft sitting near all-time highs. Netflix earnings this week on Thursday, by the way. I did put a trade in yesterday on Netflix, trying to see if we get a pop-up on news. I'm going to fade that around the expected move that I calculated. NVIDIA is probably the big reason, like the NASDAQ is up and the S&P is up. Okay, everyone know the news here? It was like those H2O chips are going to be allowed. And that was like originally why NVIDIA was talking about like losing $8 billion was because those chips were being delayed or not being able to be sold. And now all of a sudden it's like, no, you can sell them. And so NVIDIA's up on that news, which gives me more reason, more reason to continue to roll the ownership that I have and continue to roll as long as I can, where even if I'm not catching up with all this appreciation, I can just keep rolling in time and still making a few $100 every 30 to 60 days. So I can turn NVIDIA, I know it's totally a growth stock, but if I can turn it into, I'm in the money with a covered call, I can just keep rolling and rolling and rolling, and I can still grab an extra couple $1,000s out of it. I'll just keep doing it. If for my portfolio, I can roll out to September and then roll out to October, November, roll out to December, January. If that gets me an extra $6,000 in my portfolio, $7,000 or $8,000 in my portfolio, it's worth that versus letting it go for a stock that's going to continue to perform well. Why is there suddenly a witch hunt against Jerome Powell? That's your JP, right? Seems like he's all of a sudden. It's just Trump. I mean, Jerome Powell. Look, I don't know if you've been following the Fed. It's like I like Jerome Powell a lot more than Janet Yellen. I like Jerome Powell a lot more than Ben Bernanke. I think he's been a good chair. I really do. You know what you get with him. I think he like presents well. I know it's certainly not been an easy term for him. Like these last, this will be 8 years. I think he's going to complete as Fed chair. But it's like it's funny how you say witch hunt because like how many times did Trump say that about himself? This is a witch hunt for Donald Trump. Why is everybody after me? And yet he's turned it around like he's literally trolling the Fed chair. I don't think it's a great thing to try to get him out earlier. I mean, honestly, it's like this is why I talked about Edge Finder, because if we're talking so aggressively on like get rid of Jerome Powell, he's the worst, he's costing the American taxpayer so much money, it's not true at all. In fact, I think if you put a yes man in the Fed chair, I think the market reacts completely wrong to that because all of a sudden we have a non-independent entity. The Fed is supposed to do what's in the best interest of full employment, liquidity, stability, inflation. Inflation is the big thing that's like, look, if we are going to be carelessly dovish and just melt this economy higher, I think we go into like I'm going to say mild, but I'm going to say hyperinflation. Like, I don't know if we have 10, 15, 20% inflation, but I think we go from 2% to 3.5% or 4%. Like everything now, it's like we are so close to like this breaking point of so many things. Housing market, employment market, consumer. If any of those three things break, like truly break, the US is going to go into recession and it will be bad. And the markets will react accordingly. And so every time it becomes an official recession, the markets are already down 10, 15, 20% usually. All that stuff is lagging. But I'm telling you, like the resiliency of the US market right now is because housing is still stable and not broken. Employment is still stable and not broken, and the consumer is still spending. Those three things are propping up these markets and keeping everything running on the hype of AI and the hype of profit margins and the hype of everything's good and resilient. But if we break something, the fastest way to do that is troll the Fed and force them to cut rates, or get rid of the current Fed chair and put somebody in place to cut rates. And all of a sudden, what does that mean? That means that you have a Fed chair that is pretty much a puppet for the president. It's no longer independent, if you ask me. So I don't think the market reacted good to that at all. And I don't think that there's even the power to do that. I don't think Trump can do anything other than talk about it and troll and be a nuisance. And Powell can just take it in stride, And I hope he has the courage and the stones just to stick it out and just do his thing and be like a strong, transparent Fed chair until his term is up, and then we'll see what happens next year. But it's like I think he's better than that. I respect Powell enough in this role for the last 8 years or so, or going into 8 years, that he just does his job. And legacy wise, it's like he didn't cater or he didn't crater to Trump, which I think is great. And hopefully, like the Fed doesn't do anything silly where they have to like backstop the market. They already did. I don't think really people recognize they backstopped the market 2023 with that regional bank crisis in January. They backstopped the market during COVID. They backstopped the market in 2019 with an aggressive pivot. Like all these things have been happening that it's like, yeah, the Fed helped. But from 2020 onwards, it really wasn't the Fed. It was mostly the government. Government spent. And from 2020 to now, it hasn't stopped. This big, beautiful bill, this was a tax extension. Wasn't a tax cut. This is a tax cut extension, and this is more spending. So this is more fiscal policy, just like we had through the Biden administration, and allows the market to run hotter and stay bullish. So anyway, if that happens, Trump's will blame. Of course he will. I mean, there's no blame of anything that Trump's going to take. He's no accountability. He's not the guy that's going to take accountability for the market cratering. But what it shows me is like Trump gets very vocal when everything's good. right? Everything's good. He gets really vocal. We're starting to see more trade war stuff. We're putting tariffs on copper in Brazil. We're talking tough on everybody. But if this market made a quick like 5 to 10% correction, Trump will probably shut his mouth, right? Or he's going to blame somebody else for why the market's down. It's not me. I told you to cut rates. You're way too late, Mr. Too Late, right? But look, this market has to turn. This market has to turn and give a little bit of ventilation. A melt up to me, and I really mean this. I don't know where the top is at, and I'm not trying to call the top here, but a market melt up to me at 6,500 or up into the 7,000s, that is a freaking bubble waiting to happen. Like you don't have these. I mean, look at what happened during COVID. As an example, here's our run. We're up about 30% on the S&P since the April lows. Okay. If you go back to the COVID crash, this is 2022. What did we do during COVID? We obviously had an extended move. Like we had this big bottom in COVID. We got back to all-time highs, and we had a 10% correction here, and then we had a 9% correction here, and then the market figured out like, hey, monetary policy plus fiscal spending, boom, 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 all the way up. This market ripped up 117%. So we're up 30% off these April lows. There's plenty of ridiculous amounts of upside before this top is in. So it's not worth it to call a top. But understand that a melt up to this degree is going to be met with another nasty correction. And that could be another 20, 30, 40% correction. You know, I know it potentially gets worse and faster, but I mean, I don't think it's out of the cards to have like a 30 to 50% correction at some point in the next 5 years, you know? And the real question is like, are you protected enough for that? Are you prepared for something like that? Again, you can set those trades up where, you know, every 6 months or every year, you got some really cheap hedges that would help protect your portfolio through a downturn like that. Obviously, if the VIX goes from 17 up to 60 again, I'm going to sell a lot of premium. But I also want to make sure there's just plenty of margin for error where it's like, hey, look, the index can drop 35, 40% before I have any risk. Well, if I still took assignment, I would just be owning SPY, owning Qs at a massive discount, and I'd work my way through the trough. And there's a lot of upside there. But I'm just showing you like the power of these melt ups. Like this could be like a lot like COVID's playbook, which was, you know, we don't have monetary policy turning the way that it did during COVID, but we do have fiscal policy for sure, right? And so this spending bill, which is essentially what the tax bill was for the U.S., is a spending bill, and we go all the way up here, and then we had a 10% correction. So there, like COVID did acknowledge, like at all-time highs, the market was going to pull back. Cool. So if we do the same thing around these all-time highs, do we go just up through the all-time highs and then have about a 10, you know, maybe an 8 to 10% correction? I think it's very possible. So that's all I'm saying. Like it just don't be surprised on a daily time frame if we at least get a pullback. I posted this video yesterday in my journal and Pulver Alerts. You can check it out. But I think we have a pullback towards, you know, the 50 period moving average. 6,000 is a nice round number. And if we fall below that, that's probably the, you know, high, low, lower, high, lower, low. This to me is a better spot to start buying some more. If we get back to all-time highs for the year again, great. But, you know, look, if this is a bullish pattern, if this is a bullish pattern, and I know you can see, you know, I've got traders out there that are telling me this, like, oh, Chris, this is going to be like the biggest rising wedge. This market's coming all the way back down. I mean, if the market comes all the way back down April lows, this is one of the craziest markets that I have ever seen, because you go from the most negative sentiment, trade war, systemic risk, to the most bullish pivot to coming all the way back down again. Like approval ratings and trust in anything like government, markets, it's like it's all out the window. If you see like 20% peak to trough, up 30%, 20+% peak to trough in the same year, it's like that's insane. Like that's head spinning volatility, and it's going to drive. I mean, honestly, what it's going to do is probably just drive traders into fixed income, which is a terrible investment unless you want zero risk. There's still risk in the markets. There's still risk in the Fed. There's still risk in bonds. There's still risk in the dollar. Like there's still risk, but that would just be insane. So I think that right now we're so pro growth focused that even if we have a pullback, to me, this is a bullish pattern. This is a high that we just took out. Here's a structure trade down to the lows. We have a recovery. To me, this is a pullback area, and all of this is just opening up opportunities to buy a low, like buy a higher low. And if we buy a higher low, the market keeps going up and up and up and up and up. I mean, look, I don't care if it's the Mag 7, the top 10, the top 20. If you want to know the best performers, trade the S&P 500. Okay, trade the S&P 100 actually. S&P 100 is, let's see here. You've got OEX. Okay, this thing from peak to trough was a little bit more volatile. It was down 22.5%, so it's a little bit more volatile to the downside, but to the upside has been more reflexive. So your S&P 100 is like your kind of cream of the crop. It's not your Mag 7, right? It's a little bit more diverse than that, but still your concentration is like those companies that are doing very well continue to do very well. Okay. I don't think it goes much higher. Yeah, I know RSI. I mean, RSI is a good measure. I mean, I've got a lot of divergence on the time frames. I just have the big levels. I mean, I think we just get a pullback. And you know, it's hard to time this stuff. And I'm not like taking crazy hedges or anything, but the timing of this to me is okay. So we're coming into the 18th, which is a big monthly expiration. We have a VIX expiration as well. With CPI news coming out this week and PPI tomorrow, I mean, are they both disappointing? I don't know. There's just not enough news to really like thwart this thing. If we take out some of this recent clustering, we had like 7 candles in a row here, like sideways 1, 2, 3, 4, 5, 6, 7. This is 8 days. I mean, 7 or 8 days of nothing. So all we have to really look at is if we clear this low, if we take out this low here, which I said was around 6,200, that was a video I posted yesterday. If we're less than 6,200, to me, that's a bit of an interim floor that's breaking. If we break 62, there's room to 6,000. If we break 6,000, there's room to, potentially like 5,800. Okay, I look at this and I don't see that as like a scare thing. I see that as give us a pullback. Please give us a pullback so I can position for this area down here with a wide margin for error, own some shares at the lows, take a lot of income. And if the market just chops around for the rest of the year, fine, I get paid. If the market rips and goes to all-time highs, fine. I'll be positioned for a melt up, you know? So there's a lot of ways to do it. It's just don't keep going up. Please. Like, give me something normal. Give me some technicals that make sense. RSI is overbought. Divergence is crazy on the daily, weekly charts. So Ryan says, I think this is a pullback, not a buy. So you're saying what? You think this is a pullback that becomes a bigger correction? The only thing I disagree with that on is, we are looking to see the Fed cut rates this year, and the tax bill has been put out. I mean, the Trump administration has been aggressive about at least doing this stuff now before midterms next year. I think if the market's really going to have like a nasty turn, it's probably after like a big flip in midterms. So maybe like the middle of the second half of 2026. Unless, like I said, I'm telling you, unless the consumer breaks in the U.S., unless the housing market breaks in the U.S., or unless the labor market breaks in the U.S., one of those three things right now, like that's the 3-leg stool that's holding everything up. If one of those legs gets kicked out, then sure, this thing can turn over, topple over. We can go into recession pretty quickly. Like, it's all that sensitive. But I think if it's just stable, not breaking, still resilient, the market finds a way to do just fine. Doesn't have to be melting up to all-time highs and getting another 5-10% higher. It just means like, look, we've had a 30+% recovery. This market can just oscillate for a while. This market could pull back 5 or 10% and just kind of hang out here, not crash, not rip, sideways. Like, traders don't realize like sideways is also a pattern. Sideways is also a cycle. So there's still ways to make money in a sideways market. In fact, that's probably where I personally will make the most money, because we've had such a big rip. Like, I'm behind on a lot of my covered calls. Like MicroStrategy is at 390. It's trading up to 450. NVIDIA, I'm at 130. It's trading up to 150 and change, 160, right? So a lot of my covered calls are in the money. Tesla, it's like I've got 270, 280 covered calls. We're trading at 300 plus. Okay, but I'll just keep steadily rolling those out, right? So yeah, I mean, the retail crowd for me, like, look, I'm looking at buying the dip around like 5,800. If I can get a trade down to 5,800, I'm that trader. Like, I don't care about 6,000, because I think that 6,000 is the first leg. So we hit 6,000, we pull back here, we go one more lower, and then people start to lose their mind a little bit. They're like, oh no, right? It wasn't the immediate dip. It was the dead cat bounce. But if I position here, I think this is more of the trough. We stay above 5,700. Look at the moving averages, by the way. Look at all this support here. If the market fell down to these moving averages and then found support, it goes right back up. If it breaks below that, then yeah, pump the brakes a little bit and stop being so freaking bullish. But there's clearly a line in the sand. If we're below 5,700, then yeah, things look a little bit sketchier, you know. But this structure could easily pull. I mean, just take a simple fib, right? Take a simple fib. Take the low, take the high. And again, this isn't perfect science, but look at your 30 to 50% zone. Like right there, 30 to 50% to me is like a great spot to be looking to buy and look to buy. Well, that was quick. I just hit my profit on SPX. So that's the trade for this morning. Update. Should have let that go a little bit lower, but whatever. Update. Entry 615. Okay, so taking that trade there. All right, so 555. So we are fading off of that 6,300 zone today, which is good. And here's my intraday stuff. So we are heading lower. That's good. I'm looking for potentially a market to move about 1. The VIX is up to 17.1. We might overshoot a little bit from this top. So this is around a 1+% move. I'm not really looking to be a bottom picker today. You know, Confucius say when you pick market bottoms, you wake up with smelly fingers. So don't do that. But 17.13 VIX is going up a little bit, maybe a 1.07% move. So if we are talking about a little reflexive low today, maybe around 62.30 or so, 62.35, 62.30, if I'm looking to maybe grab a credit spread at the bottom. The other flip side of this would be, could I sell like a 6,300 and get paid on that? Let me check this out really quickly on SPX. SPX for today, 6,300. But I can still get a buck for that trade. Let me see the highs in for the day. Let me try a call or a butterfly call spread here. Only if the credits are decent. 62.90 or the highs on the day. So the high today was right around 6,300. Right, I kind of want to pin that high. I don't know if I'm going to get filled in this or not. $0.15. Part of me just thinks it's over trading. 63.5 wide. I just don't get enough credit for that trade. That's way too much risk. Yeah, I mean the VIX is going up. I'm looking at this chart over here. VIX is going higher. So we've gone from a 16.57 VIX up to 17.17. That's just going to increase that potential daily volatility. Again, not trying to pick the bottom on the day, but we are heading back in this sticky zone around 62.60, 62.50. I'm going to change this to a potential like 35 to 30 low for the day. But the nice thing is I said 6,300 should be some pretty solid resistance. So far it is. This isn't a surprise. The market news today was CPI, and it was just kind of an excuse to kind of get this thing positioned, maybe bait some of the bulls at the top, and then let this market fall down and start a correction. Okay. Let's see here. Yeah. All right. So I'll watch and see if we have a bit of a bottom play today. I was looking to sell. I might try to put this butterfly spread in, but if I'm going to take this butterfly spread, I want a better fill. So I'll try to pin this thing a little bit higher towards today's highs at 63. Do we get to 6,300? Maybe 63.05 to be safe. And broken wing, I'll probably risk like the 900. So I'm not taking intense. I'm going to try to get filled for like, let's see if I can get filled maybe 75 cents on this one. I'll try 75. Okay, so what I'm putting in here is a broke wing butterfly. It's a 0 DT. This doesn't have to be like an official pulver alert because the VIX is spiking up. So to me, VIX is up right now. It's kind of flat on the day, but we have gone up in the last probably 60 minutes. The VIX is up like almost 4%. So I think if this market, breaks through 6260, we have room to continue to see some hedge flows down into 6,000. Like 6,200 is our floor. We break 6,200, 6,000 is open and easy target. We get below that, I see us going to like 5,800, 5,700. That's where I'm looking to like be patient to buy the dip. So anyway, the trade I just put on is this. I'm looking at a broken wing butterfly like so. The pin price would be 63.05. So what that means is if price is going to come back up today, as long as we don't take out this high, or if we do take out the high, I've got a pin price there to grab a profit trap. So this would be trying to pull in 75 cents credit with a $5 profit trap. And then my risk would be over, it'd be at 63.11. I guess 63.10 plus would be my risk. So as long as price is below 63.10 today, I can pull in at least this credit or even get a bit of that profit trap by the end of the day. But that also, if the price keeps going lower, this doesn't even fill, and it's just a trade that never takes, which is fine. I take a lot of those trades in the 0 DT environment because I don't really force trades in a 0 DT. I will let prices come to me and set up. So if it takes, great. If it doesn't, no big deal. I will look to see if we get a bounce today around that one. It's like a 1.05 to 1.11% move. That would be where I'd expect the market to show some reflexiveness off the lows. But I'm telling you, man, don't call these freaking bottoms or tops. Like 6,300, I felt pretty good ceiling to see some resistance. 6,200 though, if we don't hold 6,200 firmly and we break below it, we're dropping to 6,000 or 5,900 to 5,800. I don't think that 6,200 floor means anything if it's broken. It's broken, we're dropping a couple hundred points easy, and that gets me right into like a 3, 4, 5, 6% correction. Just on this indicator here, this is again highlighted in the video that I posted inside the journal. That is about a 4.5% correction. Okay, fine. Give us a 4% correction. Could the 4% become 7, 8, 9%? Sure, because we go high, low, lower, high, lower, low. Everyone kind of loses their mind a little bit, like, oh my God, this market, it's just a pullback, folks. But I would say I'm not really that excited about buying any dip until we have a meaningful like 5 to 10% pullback. Okay. All right. So that's where we're at. So the good thing is, grab some money today on the daily profit play. I love it. Price is going our way. I wish it would have been more aggressive on the sell side is to get the premium that I wanted. So trade that I took was pretty simple. I just took a trade where I put in a little dead zone and I'm getting paid on the left side of the chart. So I pulled in $60 per contract right there, and I'm taking the profit. Okay, now we'll let the day just kind of unfold. I mean, I'm going to see some red in the market. I'm going to see some red in my portfolio, but remember, I'm just going to be selling a bunch of covered calls as well. Let's just kind of do some spot check here for the next little bit. I think I've got some extra time to run over. Chandler, James, let me know if we've got a guest coming after me, if I'm closing up today, because I'll go a little bit longer. I think I'm good. Yeah, I'm good. I'm good for a bit. Let's talk a little bit everything. So SPX turning off that 6,300 handle. Are the Qs turning at all today? NVIDIA is way up, but the Qs are turning. Look, honestly, I'd love to see this thing like somehow surprise us with a move down like 10, 15 points. I have a bear call spread that's just a bit of a tiny hedge. It's just more of like I think this market's going to fall, but I picked the wrong expiration. I feel like I picked the wrong expiration. I did a July 18th, 540 by 542.50. Or I'm sorry, a 540 by 545, and I pulled in 259. I'm risking, $2.40 roughly. So I end up probably taking a loss on the trade. So we'll see. But if we drop aggressively, I'm going to set this chart alarm at 540, which is right there. So if we somehow get to here by Friday, that's a long fall, by the way. That'd be a nasty spill. But if we get there, I could possibly get a pleasant surprise. All right. Thanks. So S&P is down slightly. NASDAQ is up slightly, but turning down. Maybe this comes back to the gap levels. The Dow is down 0.66% today. Wow, big change on the Dow. And then Russell down almost 1%. So not all indexes created equal. The Russell's clearly a bit more volatile. And I even looked at trades yesterday. I was looking at Russell trades here, and I'm like, I just don't like the Russell that much. I think we still need to have a pullback or correction. I'd love to see the Russell pull back into the low 200s, and I'll start just selling more calls. We go to the VIX. Like I said, the VIX is spiking up a little bit today. Here's a good look at the short-term VIX. So from 16.5 to 7, I mean, we are up about 4% today on the VIX just off these lows. So this is something to pay attention to. We start creeping up in the VIX, we're probably looking at some more downside pressure. Just keep that in mind. Okay. Let's go to the dollar index. Dollar index, as I said, catching a bid off of symmetry. Is anybody long the dollar? That's a courageous trade. It wasn't a trade I wanted to do. I'm not long the dollar, but I am looking to see, okay, dollar catches a bid, gets up into 100, maybe 101, maybe 102 area. And then I'm looking to look for some topping patterns to fade the dollar back down. Okay. Oil, pretty good support at 65. Natural gas, I'm selling calls, but it's catching a bid. I think I have an August 1st UNG trade. Roll to 8. Yeah. So 1650 is my covered call on UNG. We're trading at 15 and change right now. So UNG here, 1556. I'm covered out August 1st, which is only a couple weeks out. This trade, if I get it called away between all my positions on UNG, makes me, I don't know, like $3,000 or $4,000. I'd like to roll it more if possible and just turn it into a bit of an income diagonal. So maybe this surprises me to the upside and we get into like 17 or 18 bucks and I can keep kind of rolling it out, but that'll be just wait and see. Gold, still sideways. Silver, had a big blast off here for those 2 days. It hit, 39.15 on silver is pretty awesome. 40 is a nice round number. I still think silver is a good bid. We pull back. I mean, just look at your moving averages, right? Pull back to the 21, pull back to the 50. This is a bull flag zone, so maybe pull back and checking this bull flag before we get a continuation. Look, even if silver did this, if it runs up here and pulls back, I'm still buying silver at this dynamic support. I think silver is a great trade to buy and still look at the long-term upside, even medium term. Okay, silver futures. I'll wait for pullbacks before I expose some silver futures. Bitcoin's down a decent amount, 123 down to 116. Totally fine. I don't know if this is like a big profit-taking area. This isn't close to my measure move. If this is consolidation or recent all-time highs, big level support on Bitcoin would be down here towards like the 108 to 109 handle again, maybe the 111, 112 handle again. Okay. A bit of a concern on Bitcoin to me would be if we came back down to this 90, like this 100 to 98,000 level, and we set in a bit of a topping pattern and we come all the way back down. That would be bad. Like that'd be a bad look for Bitcoin. So I think a lot of traders to see the integrity of this bull market is you want to see a pullback is fine, but you want to see some dip buying and some dynamic support off these moving averages. You can buy in here, buy some confirmation, see if we reach all-time highs again. Obviously, if the markets are down, if the SPY takes a turn off of 6,300, heads lower, I don't think Bitcoin's going all-time highs. So just keep in mind, like there obviously is a bit more volatility and it depends on some risk appetite to see Bitcoin continue to make fresh highs. Okay. MicroStrategy, pulling back a little bit. I still have an income trade here where I own the shares at like 250 and I'm trying to get it called away at 310, 315, 320. I'm just going to roll those out and up. I think I've got plenty of wiggle room here. There's a lot of volatility, but I wouldn't really be too worried about MicroStrategy until either one, we see like a massive bearish pattern on Bitcoin, or two, this thing comes all the way back up to 541 when it was melting up crazy like that 2 to 3 times proxy. And if it melts all the way up to like 540, then yeah, I'm trying to like time this where I can just get out of my stock and try to get this bumped up to maybe, I don't know, if I can roll my calls up into like the high 300s of this thing still goes up into like 500s. That's a lot of money. I mean, MicroStrategy has paid me pretty well this year. If I look at my positions, MicroStrategy, I mean, I'm up $45,000 on MicroStrategy. And a lot of it is just income. Like I've lowered my cost basis almost $150 and I own like 500 shares of MicroStrategy. So yeah, I mean, I want to see it do well. I'm actually, I could be up a lot more money had I not covered it. But I just thought this is the type of stock where if the downside kicks in, I don't want to be on the wrong side of the downside move. So I put on collar trades quite a bit, but the premiums were just so good I couldn't not take the trade. Coinbase, we're up to 390. I did a call condor. You saw that posted in the pulver alerts. The call condor should look something like this. So out to the 25th, which is a week before earnings. I think earnings are on the 31st. 58 cents credits what I took in. I have a $5 profit trap. We're trading up to 390. This strike price is around the 455. So Coinbase is going to have to continue to go up another 16%. If Coinbase goes up 16%, I'm going to take on a little bit of heat, but I also have a profit trap in the next 10 days. So that's a lot of potential upside on Coinbase that I hopefully don't see. And so it's a pretty easy like $60 winner. But if Coinbase does go higher, that profit trap in the next 10 days potentially offers me a bonus trap. So, for 60 cents, it could pay as much as $560. The risk is around, I think, $800 or so. What's the risk? Max risk, about $900, $950, because I went, I think 15 wide. So yeah, that's about right. I'm risking about $950 to make 60, but if I have a profit trap, I can still make 550. But I think the higher probability is I'm just going to win $60 in the trade. If we go down on Coinbase, then $60 becomes zero, which is good. Like our 60 cents we pulled in for credit becomes 5 cents debit, 0 cents debit. Just take the profit. Ethereum's made a pretty good run. I'm glad I got in when I did. I bought ETHA. I'm still holding this until we hit a profit target around $30. So Ethereum, to me, I'm looking to hold on to Ethereum until we hit recent highs at $4,050. All-time highs all the way back up here towards 4,800. So this to me was a good structure trade, bit of a catch-up trade. Don't be surprised if the market does something like this. We rally, we pull back here, maybe a bit of a channel. We just keep going higher. So if we have higher lows and dips to buy, I wouldn't mind seeing some dips to buy some Ethereum, but I'm already in. I bought the shares. I thought rather than trading options on this one, I just bought the shares of ETHA. This would be up around 50%. So I bought the shares here. If it rips up to my resistance level, then that's around a 50% return. I will probably take profit there to be on the safe side, or at the very least move some stops. I'm not letting this thing turn into a loss. So let's see if it just runs up to hit recent highs. Copper after that 50% tariff news and that big distorted move, it's sideways, but I think a good spot to be shorting, at least in the near term. Japanese yen, wow, big drop in the Japanese yen. So that means that our dollar yen's probably heading higher. So dollar yen is up to 148. This is exactly what I said. Watch this channel, the 143 handle heading back up. I mean, we're higher than this initial, April, May pullback. So I think eventually it's still a good trade to just watch, maybe a channel like this. There's a lot of support resistance in this area around the 150 handle. So it might be a volatile range on the dollar yen, or it might do what Japanese yen does best, which is just make everyone miss. It's like you kind of chase the yen, you miss the yen, but maybe it runs all the way back up into 154, 155, becomes a big resistance level and just a big range. I'm not sure yet. So anyway, that's that. Let's go 6J again. So 6J, oops. Here. So that's a pretty big drop in Japanese yen. I will incorporate some more Japanese yen futures if we come back down to these lows. This trade, close out for good profit in futures. I'm going to do the same thing if we come back in, or even get close to these lows. I'll go out probably 6, 8, 9 months, whatever I get in the futures market, and grab a really simple trade in the Japanese yen. Nikkei still not going anywhere. FXY, that's the Japanese yen. EWJ off the highs. It's frustrating. I'd like to see that go a little bit higher. DAX just pulling back. Maybe some sideways price action here, pulling back to the 30% zone or 23% zone. FTSE just off of all-time highs. Argentina back to the 200 moving average. I'm going to hold off on this one. China back up towards recent highs. Brazil off of recent highs. Latin America off recent highs. Mags, Nvidia up to highs again. Does the Mags roll over? We have earnings next week. Mostly Mag 7 is next week, or to the next 2 weeks of trading is going to be Mag 7. Apple. You know what? Let me look at Apple here. I kind of hate Apple, but in a way, it's not that bad. For it's cheaper. It's cheaper than buying the index. It's pretty safe. Cover calls aren't terrible. What's like a 170 put on Apple? So Apple to the end of the year. I'm just curious. So as long as you don't blow up a trade war, Apple has crap tons of cash. It's obviously volatile compared to the benchmark. Let me see. January, 170. I mean, a ratio spread, that's a good looking income trade if you ask me. Like, we stay resilient on Apple. Let's say that gives them, 185 days to start mentioning AI. AI, Apple's going to do AI. Maybe that's a good thing. But I get $270 of income. I'm willing to own some shares of Apple. If I took assignment of Apple, 170 minus 5 minus 2.70, I'd own shares at 167. The nice thing about that would be we're pretty well supported on this. This is a yearly moving average. And, as long as we're kind of maintaining like the low in April. So if we just kind of stay nowheresville on Apple, that's a good thing. If we go, high, low, lower, high, lower, low, like I don't want to get stuck in a bad position on Apple, but I think I could also work through it and repair the trades. So from high to low, Apple was down 30+%. I would still be looking to own shares cheaper than that. So it'd be like 170 minus 5 minus, it'd be like 163 and change. I mean, own it at like a 37% discount. That's not bad. I think Apple is cheap enough and resilient enough, sideways enough. I'm hoping that comes out okay. So I think I'm going to take this trade. So I'm going to do a ratio spread on Apple. This one, I think I don't have much exposure on Apple right now, so that could be a good one to sprinkle in here. So Apple, this pinch point is out for a while. Cover call on shares that I own. I'll keep rolling those out. All right, so I'm going to take a trade on Apple. So I'm going to go out to January of 170. That's a pretty high delta. There's a good 90% chance of profit on this trade. Plus the assignment, I don't mind owning the shares. If I own shares at let me see if I take a little bit less. So 220 and 184. I'm going to take this trade down here. I'm going to do a 170 by 165, take in like $220 of income, and try to flip this if I can. So this account, 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 this account. I'm going to flip Apple for, if I had any assignment, I'm going to try to flip it kind of aggressively. So trade is try to grab, 215 to 220 income. That's the plan. That'd be 1, 2, 3, 4, 5, 6, 7, 8. So income wise makes me $1,760 by the end of the year. And, this 220, if price goes higher, then the 220 erodes down to a, 30-cent debit, 20-cent debit, take the profit. Let me see what I get in here for 220. Let's go. So 220 is not filling. Let's try 219. This is below the mid price, by the way. Come on, 218. All right, 218 is getting filled. Good Lord. 217 filled. All right, so this is a trade filling at 217. And to me, I'm looking at it like it's a pretty solid $200 of income with a little margin for error. So if I build this trade out, Apple going out to January. This is a, let's see. All right, so I am doing buying the 170 and selling the 165. So here's the trade. So current price of Apple right around 210. So as long as price stays between 210 and all the way down here to 165, that's my pin price. So we get all the way down to fresh lows. I still have a profit trap there before I'd have to take on any risk. So my break even is going to be around 157. Like I'd happily take some shares of 157 below April lows and flip it with a 2-week, 4-week covered call. Try to make $300, $400, $500 on it. I've got the capital to do that. If prices stay sideways, I keep the credit. Price goes up, this credit decays faster, and I keep most of the income. So let it do its thing. All right, so that trade is in. Let me post this trade. So this will be under Pulver Alerts, stock options, and this is new trade. Apple, 116.26 expiration. Buying the 170 put with one contract, selling the 165 put with two contracts, pulling in $2.18 credit. This is a ratio spread, and I'm willing to own Apple shares if price is less than 165 by expiration. Break even price will be, actually, there's about a 90% chance of profit. Assignment risk on this one based on getting assigned 160, it'd be 157. 157 puts me about like an 8%, 8% chance of assignment. My break even price, if assigned, is going to be 165 minus 5 minus 2.18, 157.82. And I'll add probably a 30-day covered call to repair for $5 to $10 profit per share. So right now I'm looking at a trade that pays me 1, 2, 3, 4, 5, 6, 7, 8, 2.18 times 8. So the likely trade is going to be I make 17.44 on the trade. If I take any assignment on Apple and I repair it, I'm gonna say I'm gonna try to go after $1,000 a share. So it goes from a 17.44 income trade with no assignment to owning it and flipping it for hopefully close to $8,000. Because my goal is to try to repair it, lower the cost basis, get it called away for about $10 a share. Okay. All right. So I'll take a screenshot of this guy as well. Where'd it go? Yep. Here's my trade. All right, that's posted in Pulver Alerts, little Apple. Okay, so this one is profit. Let's change this one up to the 116. And it's a 170. 165. Pulled in 2.18. And that break even would be 157.82. Right? 165 minus 5 minus 2.18. 157.82. Boom. Okay, there's the trade. So if we just kind of hang out here on Apple, that's good. We hang out here, we go up, that just makes us easier income. We come down to test the lows from April. Well, there's potentially assignment risk and I'll repair it. All right. Let's see what else. What's out out there for mags? I've got some ratio spreads in on Amazon, trying to see if we get back to all-time highs again. Broadcom, I actually put in a little bear call spread that may or may not work. It's got to drop about $15. Google still owns some shares and ratio spreads out to the 135 out of the way. Meta off the highs. I don't mind getting some dips on Meta, but I'm just not in a rush to buy a stock that's $700. Microsoft, I still own shares. This is the dollar cost averaging I did earlier in the year, which was bought it here, and then bought it on the trendline break. And so that allocation is right in the middle around $400, and now it's up about $100 a share. So I'm still going to ride some Microsoft out. Netflix, I'm looking to sell like the 1400 level. I calculated out an earnings play. We have earnings on Thursday for Netflix. Nvidia, again, cracked up the highs with that H2O chip news. Tesla trading at 313. Honestly, Tesla's become just like a really good high premium covered call strategy for me. It's not going very far. It's not going anywhere, in fact. But my calls, I'm trying to play catch up. I've got like 275s and 280 calls that are in the money. But every time I roll them, I'm getting like $2 to $3 per roll for like a 2 to 3 week roll. So I'll keep doing that, and I'll just turn this into an income trade. Tesla has earnings at the end of the month. This is going to be actually no next week, the 23rd. Yeah, so we have next week earnings on Tesla. Probably some drama sitting around that one. But anyway, Berkshire there. Bonds. No bid on bonds, man. Bonds are down. This means yields are up. Hey, yeah, Trump. Let's talk the Fed into cutting rates, and the market does the exact opposite. So again, yields are higher. This is that potential like stagflation discussion. Like we go higher in yields and we break some recent highs. It's not a good thing. This like housing, employment, labor, bond market. Throw that in there. If yields rise, that's not a good thing for the markets. That's going to choke off growth. So we'll see. But there's a lot of those factors where it's like everything kind of has to stay stable and resilient for the market to maintain these levels and these valuations. Okay. I think that's what's scary about this thing rolling over. If it rolls over, it's going to roll over fast and probably be a violent correction that, maybe you're ready for, maybe you're not. I know that I'm hedged out to the end of the year, and those hedges take me down to April lows. And if those April lows pay me, they're paying me somewhere between 16 to 1 and 45 to 1. So I'll be okay. But at the interim, I'm also not taking a ton of unnecessary upside risk because I feel like the asymmetry is actually more lined up to the downside. Like we could have some violent pullbacks. And it's just a matter of how resilient, how much of the retail crowd and institutional crowd wants to buy, the dips. So it could be a huge surprise. The retail crowd again has gotten it right, and they feel pretty smart. But believe me, the institutional side likes to make that retail crowd feel some pain. So a nasty correction could be, in the cards for the retail crowd feeling like idiots, right? All right, Qs. This is CQQQ. Alibaba getting a nice little pop to the upside. Oh, okay, Alibaba. Baidu looking better. There we go. All right, Baidu. That's good. I have some shares of both. So Alibaba, Baidu. So Baidu is here. Just some shares. I'm still down. I'm still looking to see. I mean, technically, I'd like to see if Baidu can get up to like 105 or maybe get up to my measure move here towards 115. I'm kind of hopeful that we have a spring to the upside there. FXI trying to get back to all-time highs. I've got a take profit up there at the highs. KWeb got some profit taking at $38. JD at 31.77, just selling some calls. Let's go here. 50-day, 200-day market breadth still looking okay. 50-day, 200-day looking okay. Kind of a timing indicator. Now it's not a sell signal yet. We're not overstretched to like crazy amounts where it's like 90% of stocks above the 50 and 200-day. It's not there yet. What other stocks? Costco, Walmart, Nike, Home Depot, Lowe's, MasterCard, Visa. We've got earnings coming up on all these soon. So just be mindful of that. I got a ratio spread on PGR I need to pay attention to. Palantir up to some fresh all-time highs as well. Interesting. HIMS sideways, but off that big like 25% surprise is off the lows. Uber pulling back a little bit. Lyft, big pop on Lyft and it's faded. I'm hoping this just kind of consolidates. I'd love to see Lyft up into the 18s. Sector-wise doing fine. Let's get some currency pairs and I'll let you go. Still long Aussie CAD, still long Aussie Swiss. No trade in Aussie yen, even though it's been a weaker yen. Aussie New Zealand is still bullish. I'm still long in this one. Aussie dollar, I'm waiting for a pullback, which we're kind of getting one. I'd like to see a deeper pullback. 6,400, 6,300. I start leveling into the dollar CAD or dollar Aussie dollar long. CAD Swiss, come on, bro. Give us a freaking bottom, would you? If this bottom holds, we get up to a little swing, consolidate over here, maybe a reversal pattern, getting back to a pocket, lots of support back here. Love to see some CAD Swiss longs, but just takes time, I guess. CAD yen, Japanese yen weaker, Swiss yen, just don't stop this thing. Like, don't call the freaking top on this. We're already at all-time highs again. I wouldn't touch this thing unless we have a big topping pattern, which hasn't happened yet. Euro Aussie, no trade. Euro CAD, I said if you faded the highs around 6,000, that's not a bad position. Just got to be willing to kind of level into it. Euro Swiss, just garbage. Maybe it holds support at 92.50. Euro Pound, surprisingly volatile. This pair is usually like the most boring currency in the land, and it's like really, really volatile. I don't do a lot of like discretionary trading. I just let a robot do the work, but it's been a lot of ups and downs. Japanese yen, again, I mean, this is up 900 pips since May. This is why this thing's up almost 2,000 pips since the bottoms in March. That's a lot. Euro New Zealand, nothing yet. Euro dollar. This is the turning point that I was talking about. Watching the dollar catch a bid, going back to like 100 or 101, 102. If the euro dollar sets up like a trend line break and then a pullback, you can short that. Maybe pull back to the same highs again. You could short that. I think the euro dollar pulls back to like a 112 handle. I think that's a reasonable pullback on the euro dollar. Pound Aussie, no trade. Pound CAD, sold equal highs at 87.50. That was a great trade. Pound Swiss, possibly a double bottom here if you're willing to dollar cost average in. You're not worried about the margin. It's a high margin pair, which kind of sucks. But leveling in here off these like April lows, we could range back up into like the 112s. Pound yen, I wouldn't touch this thing. Pound New Zealand, it's sideways. Pound dollar, just starting to break the trend line. This could be a topping pattern. So if we sweep the lows, we could have a left shoulder, head to neckline, pull back here. There could be a starting point to at least go from a inner trend line to an outer trend line. Take a swing low, swing high, pull back to like a 30 to 50% range. Just let the market find some equilibrium. It's possibly all it is, but enough to maybe get a pullback trade, swing trade, stop above the high, swing down to find some equilibrium. New Zealand CAD, give me a pullback here. New Zealand Swiss, still waiting. Still long on that one. New Zealand yen, no trade. New Zealand dollar, pullbacks are good. I wouldn't mind a pullback in here to start leveling in. That'd be small, possibly leveling in down here. So area 1, area 2, stop loss would be a nice little buffer below these levels. I still think this is open space. Little pullback, little pullback, little pullback, open space, just kind of grinds. I think we go back to like 63.50. If the dollar is going to be in a secular bear market, New Zealand dollar should go up. Dollar CAD still hasn't broken the trend line yet. I kind of hate this level. It's not low enough that I'm really excited to buy it. If this had like a big sweep above like 4,000 or like 3,900, then maybe that's a swing trade, right? Maybe that's a swing trade to give you some more upside here, but it's a very messy support resistance area that I think we're just going to be trading in between. And then dollar Swiss catching a bit of a bid. This needs to catch a lot more of a bid. Get on the right-hand side of this trend line, pull back, get a little 3 to 5 wave move. This area for me, this pocket is what I'm after. I've got a pretty nice chunk of profit here from 86 to 88. My break even is around 80. I leveled in at the bottoms here, so my break even should be around 84. So if I can get out of here like 87, 88, I'm taking the profit again on dollar Swiss. But we've got a long ways to go to break that trend line. Okay, and then dollar yen, as we showed, ripping up here the last like 3-4 days. Your guess is as good as mine, but I'm staying out of the yens. I will consider selling the yen way the heck up here. I'll consider watching the yen for maybe some channel resistance, maybe, but probably not. Otherwise, I'm just going to stay out of the yens. So, all right, that'll do it. Wow, I went long today. All good. Hopefully that helps. Did a little bit of everything. Mag 7 indexes, top down, 6,300 resistance. If you didn't have a chance to go into your Discord for pulver alerts, okay, if you got access to my pulver alerts, go to the journal and check out this video. I posted this video yesterday. So 6,300 highs, 6,200 lows. Watch key levels for SPX. Check it out. Okay. All right, I'll let you go for today, and thanks for being with us. We'll see you tomorrow. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.